Nyamiche, contact me after the class. Nyamiche, contact me after the class. Now, like I'm saying, preparation of financial statement is not new to any of you. So somebody will ask, what therefore are the advantages or the importance of financial statement preparation? What are the importance or the essence of financial statement preparation? Please, when you come across such a question, don't disturb your head. Don't disturb your head. Automatically, you should know a minimum of three importance of the preparation of financial statement. Three importance of financial reporting automatically. How do you know that? How do you know that? It's very simple. Okay. How do you know that? One, what are the books of account? What are the books of accounts that we prepare at the end of the year? What are they? The books of account that we prepare at the end of the year. We have what? Statement. We have statement of financial performance. True or false? True. We have statement of financial position. True or false? True. We have cash flow statement. Right? True or false? So these are basic books of account that we prepare at the end of every year. So if you go and see a question, what are the importance of preparation of financial statement? Just tell them that our financial statement is prepared in order to know the financial performance for that particular year. You are very correct. To know the financial performance. That is why we prepare the statement of financial performance. How do you know whether you are improving or to track the profit or loss of the year? That statement of financial performance, which is also called the profit or loss account. And also you can say to know the financial position of the year of that particular entity, to know the financial position of that particular entity. And ladies and gentlemen, you are correct. So when you say to know the financial position, what does it mean? To know the total assets and liabilities of the entity. Anyway, so what is found in the balance sheet? Assets and liability. To know the financial position of the entity at that particular point in time. You are very correct, ladies and gentlemen. And when you say financial position, to know the total assets and liabilities of the company. You are correct. Then you have the last one. To know the what? The liquidity. To know the liquidity of the entity. To know how liquid the entity is. That is cash flow statement. Cash flow statement is what? To monitor the liquidity of the entity of what? Financial statement. Then when you finish and you think it's still not enough, you can still go ahead and say that, go to the balance sheet and say that what? The statement of financial position, how, this is public sector, of course. So help the government to know the total liability of the entity in order to decide how to what? To manage it. In order to decide how to manage it. To know the total liability in order to decide how to manage it. It helps to ensure accountability in this public sector. You see, so when you prepare your financial statement, it means you are accounting to the public. So statement of financial position, statement of financial performance, in fact, all the books of account are just ensuring accountability. You are accounting back to the people that employed you. And it also helps to do what? Liquidity. Financial statement also helps to know whether there's enough funds to pay our suppliers or creditors, or whether there's surplus fund. If there's a surplus fund, what do you do to it? You invest it, or to know whether there's surplus fund in order to know, to decide where to invest the surplus funds. So please, in case you go and meet a question like, why the importance of financial reporting, importance of financial statement, please, it is basic. Just remember the books of account. What are the books of account? And each book here is telling you that what? This is an important of financial statement. So financial performance, to know the financial performance, financial position, to know the financial position, cash flow, to know the liquidity of the company. When you finish and it's not enough, tell them that what? We prepare the financial report in order to ensure accountability. Accountability. Do you understand? If it's still not enough, enter into the financial position and tell them, if you prepare the financial position, A financial statement in order to know the total asset and total liability in order for the government to decide as to whether it should go into for more liabilities or not in order to decide. I believe you understand. So please, this one is common sense, huh? Common sense. You don't learn some of these things, just know it. So that's the bonus for you. Responsibilities of the public of responsibility of financial reporting in public sector. You have control accountant general. If you don't learn it, leave it. You going to write an exams. If you not learn the importance of the controller and accountant general, if you don't want to know what are the functions of the controller accountant general, don't do it. You go and meet it in the exams. So please, this thing I expect all of you to know it by this time. If you are here and you have not learned this one, trust me, you've not learned public sector. As a public sector student, you are supposed to know the importance of the controller accountant general. You are supposed to know the importance of the principal spending officers. You are supposed to know the importance of the finance minister. You are supposed to know all these things because they are the key officers in public sector. They are key officers in public sector. You can't be a public sector student and tell me that, oh, so I don't know the importance of controlling accountant. What are you learning? Hey, what are you learning? You are supposed to know it. Finance minister, you are supposed to know it. Whether it comes or not, you are supposed to know it. Why? Because I'm learning public sector accounting. If not, trust me, you've not started learning public sector accounting. So please, these are key things you are supposed to know. I'm pleading with you. Those of you who have not decided yet whether you are passing or not. Some of you have not decided. You are just learning. You are just attending classes. You've not decided yet. How do you know whether you've decided or not? When you wake up at 2 o'clock, when everybody's asleep, that is when you can tell yourself that, indeed, I've decided to pass. But whilst your child is sleeping from 8 o'clock p.m. to 6 o'clock a.m., you, the mother, you're also sleeping from 8 o'clock p.m. to 5 o'clock a.m. You wake up 1 hour earlier than your child. You are not prepared to pass. You are not prepared to pass. Because if you're prepared to pass, you know that this course you are doing, ordinarily, you're supposed to use like 6 months or 1 year to do it. But once they've limited it to 3 months per annum, you should also tell yourself that the 3 months per annum have to create extra time to learn. And extra time to learn is 2 o'clock, regardless of your excuse. Regardless of your excuse. Can I give examples? Muslims, when they are fasting, they wake up very early to pray. That one, there's no excuse because it's very important. When God forbid, when there's an occasion in your house, you wake up at dawn to start preparing. There's a wedding, there's a funeral, whatever occasion is in your house. You don't wake up at 6 o'clock. You wake up very early to prepare. You have exams and you are waking up at 6 o'clock or in the morning. No, you're not prepared to pass. I put a time, 3 o'clock a.m. Somebody come. He said, 3 o'clock there, say Satani Adao. Now at that 3 o'clock. You have exams in 38 days' time. Now at that 3 o'clock. Please be motivated. Okay, good. So you are done. Now let's come to the activity of the day. Please, statement, preparation of financial statement. Preparation of financial statement. Trust me. If you like, go to heaven and come back to hell. Okay, you meet question on preparation of financial statement. Why will you meet a question on financial statement? Because as part of ICAG syllabus, they are supposed to test you on financial statements at the end of every diet. So please, you have to prepare for it. Okay. Yes, you may not get central government, but then still you get financial statement. So we will learn all the three. Okay. There are 3 ways a question on financial statement will come. There are 3 ways a question on financial statement will come. What are they? We have central government. You'll be asked to prepare financial statement for central government. You'll be asked to prepare financial statement for local government. You'll be asked to prepare financial statement for covered entity. One will come, okay, and at the end of the day, that one carries 20 marks. 20 solid marks. Assuming you're able to get a 20 over 20, how many marks more will you be searching for? Just 30 marks. And 3 topics can give you that 30 marks. Passing PSA is simple, but it requires sacrifice and dedication. So please, these 3 topics, one will be coming. And by the grace of God, we are going to go through all of them. It's obvious. I cannot solve all questions with you. But then I'll teach you some of the basic tricks you'll be using and you'll pass. In Jesus' name. Okay. Good. So in any of this, You'll be asked to prepare financial statement of the central government. You can be asked to prepare financial statement of the local government. You can be asked to prepare financial statement of covered entities. Do you get it? And I'm saying that you'll be tested on one of them. Please do understand it. You'll be tested on one of them. Okay. And whatever, anyone you are tested on, you should be prepared to what? Give a good account. Because frankly speaking, they are not difficult. In fact, it's the easiest. Preparation financial statement of the local government is the easiest. There's nothing difficult there. There's nothing difficult. Provided you are serious and you have intended to pass, you pass it. Perfect. So today we are taking preparation of financial statement of the what? Central government. Central government. That's what we are taking today. Preparation of financial statement of the central government. Central government. Now, when you say the central government, what is the central government? The central government is the questions that you see. Prepare financial statements of the consolidated fund. You're going to say a question. Prepare the financial statement of the consolidated fund. Consolidated fund is mean the entire Ghana's account. You are preparing financial statement regarding the entire government's account. What bank do you save? You save at EcoBank. That is your bank. So it could have been prepare a financial statement of EcoBank. But once you hear prepare the financial statement of the consolidated fund, then it means that they are talking about what? The central government. In fact, they love to bring central government questions a lot. I don't know why, but they love to bring it. So please be prepared. Okay. I think last night a question on central government came. But all the same, because we are preparing ourselves, not just for the exams, let us go through. Next time, go through others as well. In case you meet a central government, you will not be surprised. So please, let us go through it. Good. These are the possible questions they can ask you to prepare. They can ask you to prepare the statement of financial position, which is the balance sheet. They can ask you to prepare the statement of financial performance, which is the P&L account. They can ask you to prepare the statement of what? Cash flow, statement of changes in equity, comparisons, and notes to the account. So today we will touch on this, and this. For this, we'll talk about it later. Okay, thank you very much. So this is the format. Now, somebody will say, what is the difference? Somebody will say, please, what is the difference between financial statement for central government? When I've been asked, prepare financial statement of central government, prepare financial statement of local government, and prepare the financial statement of covered entities. So somebody will say, please, what are the difference between the three? Ladies and gentlemen, please, they are the same. The format is the same. It's the same. Central government, local government, covered entities. When I ask you to prepare financial statement of these three, please, they are the what? The same. The format is what? The same. The same. So when you see local government, don't be scared. No. It's the same format, you know. Central government is the same format, you know. Covered entity is the same format, you know. The same. Everything is the same. Nothing changes. The only thing that changes is the revenue. I say the what? Revenue. It's only the revenue that changes. Apart from that, they can repair. The mathematics say balance sheet is the same, changes in equity is the same, everything is the same. When you go to statement of financial performance or the income statement, the revenue changes. It's only the revenue that changes. What do I mean by is the revenue that changes? So for all, when you come to the statement of financial performance like this, is the same, okay? With the section of the revenue. So you see the way the revenue is. The revenue, we have direct tax, indirect tax, non-tax and grant. When you go to local government, their revenue will not be direct tax because local government is not going to take tax. Local government, tax. So their revenue is not direct tax. or indirect tax. That is not their revenue. But apart from the revenue, that their structure is different. No? The rest are the same. Expenditure is the same. Balance sheet is the same. Changes in equity is the same. That is what I mean by they are what? The same. I believe you understand, please. So that is that. Nothing different. So we have our revenue, we have our expenditure. So with the revenue side, what do you have? We have tax. So when it comes to financial statement of the central government, so we are doing central government. When it comes to the financial statement of the central government, okay, we have revenue. So with the revenue, we have tax. Let me just say tax. So the Ghana government, where does the Ghana government get money from? Where does the Ghana government get revenue from? We get it from what? Tax. Then we get it from what? Tax. Who's the Ghana government? In order for Ghana government to get revenue, they have to tax us. So we get it from tax. So by the tax, no, there are two types of tax. Who can tell me? There are two types of tax. So we have the direct tax and the what? Indirect what? Tax. Of course, any money the Ghana government receives, which is not tax, any revenue the government receive at all, which is not tax, but it is a non-tax. Sorry, which is not tax, is a non-tax. If Ghana government receives any income, which is not tax, that income will be called non-tax. Example, when Ghana sold our airport, when Ghana sold Kutuka International Airport, the money we got, it is a non-tax. I believe you know Ghana has sold Kutuka. When Ghana sold airport, okay, the money we received was what? Non-tax. When Ghana sold Ghana Telecom, the income we receive is not tax, it is a non-tax. When Ghana sold the factories, the income we received is what? Tax. It's a non-tax. When Ghana sold the University of Ghana, the income we received is not tax, it is non-tax. When Ghana sold GRA, the income Ghana received, who's Ghana has sold or is at a 10, the income Ghana received is not tax, it's non-tax. I'm lying. Ghana's not sold any of them. So please, they are non-tax. I believe you understand. Then you have grants. Of course, Ghana can receive grants. That one, it is not any income you have earned. Somebody decided to give it to you for free. Okay, grant. Someone decided to give you something in gratis. So you have grant. I believe you understand. And this grant, no, it could be from a neighbor country. If the grant is from a neighbor country, it is called bilateral grant. Say bilateral. So you'll be reading a question and you realize that Ghana received an aid from Germany. It is a bilateral grant. Do you understand it? That is a grant. Ghana received an aid from Togo. It's a bilateral grant. Ghana received an aid from Germany. Any other country that decides to donate to Ghana. When COVID-19 came, we received PPE from China. We received PPE from China. It's a what? It's a bilateral grant. So we have grant and grant in a different bilateral grant. It is if the grant is received from a neighboring country, different bilateral grant. Then after the bilateral grant, we have another kind of grant called what? The multilateral. Say multilateral. Say multilateral. Say multilateral. Multilateral grant is a grant that is received from international organizations. It's a grant received from international organizations. For instance, IMF. IMF can decide to give Ghana grants. World Bank. You see, this big organization. You mentioned one. IMF, World Bank, United Nations. You understand? These institutions, when they give Ghana grants, it is called multilateral grants. It's simple. Grant is like a revenue, okay? It's a revenue. Hey, remember, it's not always that grant is in money. True of us, true. It's not always that grant is in what? Money. Sometimes they can decide to come and build a school for you. So, but then you have to record it in your books as if you have received the money. So the market value of the asset they will give you, you record it in your books as what? As grant. I believe you understand. So I can decide to give you a mobile phone. If Ghana receives a mobile phone from China, Ghana will not go and write mobile phone in the book. or you not go and draw mobile phone. No, rather you ask yourself, how much is a mobile phone costing? So the mobile phone is costing maybe $5,000. So you go and write, I've received grant of $5,000 in your books. Do you get it? You see, it makes sense, man. Good. So these are the revenues. Only three pay. Hey, only three, only three. You can't tell me you say I forgot it when I went to this. It has never happened that a student go and see a central government question and come out and say that, oh, I forgot the format. Hey, you forgot the format, saying it has never happened. Everybody understands it and everybody remembers. So please don't be an exception. Okay. So please, the revenue of the central government. Anytime you see a question, the question will come like, prepare the financial statement from the consolidated fund. Once you see from the consolidated fund, know that this is the central government. This is the only way the question can come. Or at most, it will say, prepare the financial statement of the government of Ghana. Prepare the financial statement of the government of Ghana. GOG. Then you should know that this is central government question. Hence, this structure applies. Direct tax, indirect tax, non-tax grants. Yeah, we know the structure. So that is that. So there is it, okay? So the revenue, you have direct tax, indirect tax, the two making up tax. But then break it down as direct and indirect tax. Then go to non-tax grants. Yeah, we Agbina. Nothing difficult. Can you see that? Perfect, perfect, perfect. We move to the next one, expenditure. Expenditure. So please, with the expenditure, we have compensation. We have goods and services, consumption of fixed capital, public debt interest, subsidies, grants, social benefits, and other expenditure. Please, please, and please again. I learned this thing when I was doing my first degree. And ladies and gentlemen, up until now, I can write all this without looking in the book. What I'm trying to tell you that you have to know it. If you want to pass, you have to know it. This expenditure, after you learn it, you not just use it here. You use it in local government, you use it in central government, and you use it as well as in this one, how do you call it, covered entity. In fact, when you're doing cash flow, you need this. You also need this structure in cash flow. So why don't you learn it? Please learn this thing. Know that government will use his money for to pay compensation, to pay goods and services, to pay consumption of fixed capital, to pay public debt, to pay subsidies, to pay grants, to pay social benefits, and other expenditure. Please learn it. There are how many? Only 8. Only 8. Okay. Now somebody will ask, say, please, what goes under compensation? So let's try and write them. Okay. Government will use its money, 1, to pay what? I'm listening. To pay what? Compensation. Thank you. This is the expenditure of the government. 2, to pay goods and services. 3, it's 8 too. 3, for consumption of its capital. Please, consumption of fixed capital is called depreciation. Okay, the depreciation you know, no? Public sector different consumption of fixed capital. What I say? Okay, for what? Public debt interest. See, that's what we call the interest, debt interest. Next one, for subsidies, social benefits, grant. Listen, you have grant here. This grant is when the government also decides to give out grant. You don't always receive grant. Sometimes you also give grant. You see, like the China government, he's giving Ghana grants. So in the China government books, I bet you grants on the Ghana no, as an expenditure. The same way Ghana can give grants to the lower countries like Togo. Ghana can give grant to Togo. So when Ghana gives grant to Togo, we will come and write it as an expenditure. You see that, and we have other expenses. There are 8. 8. Right now, I've written all without looking in any book. That makes me a good student. Can you see that? Perfect, 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 perfect. We are done. So please, this is the structure. So the direct tax, please. Direct tax, we have personal income tax, pay as you earn. We have corporate tax. These are taxes that are levied directly on your income. They are not levied on goods and services. They are levied directly on what? Your income. So you have pay as you earn. That's the personal income tax. You have corporate tax. You have rent tax, vehicle income tax, capital gain tax, stamp taxes, dividend taxes. Please, all these are what? Direct taxes. Example so. Indirect taxes. You have excise duty, value added tax, VAT, VAT, custom duty. Custom duty and VAT, they are levied on goods and services. Okay, you have excise duty, they are all indirect. Communication service taxes, communication, you be confused in future about communication. Take it serious. Custom duty, petroleum and petroleum product operations taxes. So all these are indirect what? Taxes. Petroleum taxes is levied on the petroleum. And then you have non-tax, receipt from sale of public assets. Any money we get from public assets. User fees, when you go to DVLA and the rest, you pay user fees, service charges and all those things. They are all non-tax. You have interest, dividend. Ghana government invest in companies, so the interest it receives, dividend it receives, no, they are all non-tax. Royalties, rent income, sale of goods and services. See, where rent income. I didn't say rent tax. If I say rent tax, that one they send to direct tax. If I say rent income, when we want a tax, it man tax. Don't force to put it under tax. Understand? We have rent tax and we have rent income. Rent income is the income when Ghana decides to give out eight factories for rent. Okay, it rents some of its assets and they give him income. It is rent income to the government. It's not tax. But when Ghana taxes you on the rent you are paying to a different person, that is rent tax. Know that. And of course, you have the grant. Okay, I told you Ghana receives grant from IMF and all those agencies. That's multilateral. They have the bilateral. When it's received from a different country, I told you that's right. Perfect. Then we have expenditure. Please, the expenditure, let's not waste our time. The most important of all expenditures is compensation. Compensation is the expenditure that captures salary and salary related transactions. Compensation is the expenditure that captures salary and salary related. So all allowances, SNET, anything expenditure related, beer goes to compensation. Anything expenditure related, beer. You are, so, and listen, for the expenditure, there are two categories of expenditure. For expenditure, there are two categories of expenditure. Okay, what are they? We have the revenue sources. What about petroleum fund and other receipts? Ipacho. So far this syllabus is concerned. Okay. So far this syllabus is concerned, go by this format. Okay. The petroleum fund and the old, don't go and follow the old structure. Follow this structure. So I'm responding to a question in the footnote, in the chat box. So please follow this structure. I'm begging you. Follow this structure. So far this syllabus is concerned. That's how you learn. Okay. Good. So don't make the thing difficult too. Something very simple. Good. So please, the compensation, I said there are two main categories. Okay. That is what established position and non-established position. You have established position, non-established position. So you see, instead of saying compensation, they're going to say established position. What is established position? It simply means jobs that are permanent in nature. That's established post. So we see in established post, established position, jobs that are permanent in nature. For instance, the accountants, CEO, you understand, their jobs are permanent, they are structured, they are defined, you have defined rules. Then you have non-established position. So compensation American, sometimes you go and see established position. You've been seeing it. This simply means jobs that are permanent in nature. Then you have non-established what? Position. Non-established what? Non-established position. These are jobs that are not permanent in nature. These jobs are not permanent in nature. Non-established positions are not permanent in what? Nature. Okay, for instance, national service personnel, NAPCO. You see, these jobs, no, they are temporary. You see, they are not permanent, they are not structured. National Service Personnel, NAPCO, intense. When you go to organization, you have intense. All these jobs, no, they are not permanent in nature, and they're from a non-established position. Established position, non-established position. Please, it is compensation. They have goods and services. Less 10. Less 10. When you talk about goods and services, any other expenditure that you don't know where to put. If you don't know where to put an expenditure, put it under use of goods and services. You see as an expenditure, this expenditure, it is not compensation. This expenditure, it is not public interest. This expenditure, please send it to goods and services. Please send it to what? Goods and services. Do you understand? They have consumption of fixed capital. Consumption of fixed capital simply refers to what? Depreciation. It refers to depreciation. And depreciation, you get it from the PPE schedule. You get it from the PPE schedule. That's where you get the consumption of fixed capital. They have interest. Please, this one, when you see it, interest of public debt. The question will always tell you domestic interest debt. Any interest, anything. The question will always add interest. If the question doesn't add interest, it is not interest. The question will add interest, public debt interest, or maybe domestic debt interest, or it will tell you external debt interest. Of course, you're not in class 3. When you see public debt interest, you see it, right? They have subsidies. Subsidies too is a reduction in the cost or reduction in price. That's subsidies. So that one is an expenditure to the government. Anytime the government decides to reduce the cost of electricity for you, this is an expenditure to the government. The government have to make money available to pay those reduction. And subsidies is for what? Is an expenditure to the government. Hence, any subsidies should be an expenditure. And how would the question come? It will come as electricity subsidies, petroleum subsidies, fertilizer subsidies. So it will always add the word subsidies to it. It will always add the word subsidies to it. So when you see subsidies, straight send to subsidies. When you see interest on public debt interest. When you see interest, send to public debt interest. Who's anything cry? Anything cry? Hey. When you see grant, you know it. Hallelujah. When you see grant, you know it. Government has given grant, you always know it. So that one, I'll not even go there. Then you have social benefit. Please, social benefits, no. That one, you have to be able to identify it. So what is social benefits? Social benefits are the expenditures that the government enroll or some of the intervention programs. The government intervention program to reduce hardship of the people in the country or to reduce hardship of its members. Social benefits are the what? The intervention program enrolled by the government to what? To reduce hardship. In terms of social benefits, a program that will benefit the entire society. Example, national health insurance, school feeding. Can you see that? So when you see it, you know it. Trust me. Solve more questions. When you see social benefit related question, you know it. Hallelujah. They have other expenses. Please, other expenses. No, the only thing that will go to other expenses is other expenses. It's only other expenses that will go to other expenses. Do you understand? Now we are done. You are done. Other expenses, no, it's other expenses. Don't send anything to other expenses apart from you seeing other expenses in the question. Then you post it to other expenses. Asa. Please, I'm talking per experience. So follow these simple guidelines and you'll be okay. I believe you're okay. Good. So please, the expenditure needed is constant for any financial statement you're going to prepare, the same expenditure you bring. But for the revenue, if it is central government, you use this format. If it is local government, you use a different format. And I'll teach you the formats that you'll be using. I believe you understand. Very well, very well. In our next meeting, we'll do the different ones. Good. So we have examples of compensation. Hey, I'm a good teacher. Also, I've given you examples so that when you identify that you can be able to see them. Okay. So we have examples of compensation of employees. So we have established post. That's established position that are fixed in nature. So in a question, you see established post, please send it to compensation. We have non-established post. Non-established post. I told you established post, non-fixed, non-established post. Positions that are not fixed in nature. Positions that are not always the example. Seasonal workers, contractors. Their job comes as and when. We have Allowances, okay, any allowances that goes to compensation, like book and research allowance, professional allowance, all these are related to what? Compensation. Then you have SNET. Who's SNET or question more? Employers' contribution, all these are related to what? Compensation. Then you have superannuation. Okay, superannuation. It is a SNET benefit. Okay, retirement benefit. It's like retirement benefits. I believe you understand. They are all examples of what? Compensation. You have end of service benefit. After you finish, you see end of service benefit. That one to they give you some a golden handshake and all those things. All those things are what? Compensation. Do you get it? Very well, very well, very well. So simple like that. These are examples of what? Compensation. Then go to use of goods and services. I told you, every question, the use of goods and services in a dozen. There are a lot of goods and services transaction. You have materials, you have utilities, you have cleaning. Please, I said any other expenditure that you don't know where to put it. Please, administrative expenses, expenditures, administrative or administration expenses. Any expenses be in the administration of the organization. Administrative expenses, TNT, repairs, special services, other services, everything be any compensation, any consumption of fixed capital, any subsidies, please send it to use of goods and services. State protocol. What is state protocol? I don't know. But so far as I don't know where to put it, I've sent it to use of goods and services. What is insurance? I don't know what insurance is. But like I said, any administrative expenditure, beer, send it to what? Because insurance, you can't put it to compensation. Neither can you send it to consumption of fixed capital. And other expenditure, no, please don't send anything there. If the question wants you to treat other expenditure, they'll bring in a question, other expenditure. So far other expenditure in the question now, or the trial balancer, they just send it to your financial statement. Wait, wait. Okay, good. Then you have consumption. Please, you see, like interest. And I told you to always be interest on public debt, interest on external debt. And if it is subsidy, they always bring subsidy, subsidy. Because how other way can you treat it? Can you see that? Fertilizer, subsidy. Anything be a subsidy, yeah, send it to subsidies. They have social benefits, the social intervention program by the government. So, for instance, school feeding, education support, social welfare programs, food security initiative has all these things are social benefit that will program that will benefit the entire society. You are done. Then financial statement, I'll not talk about it. You should know how to pay financial statement. Hello. You should know how to pay financial statement. You are done. But basically, financial statement is made out of what? Non-current assets. We have current assets. Okay. They have current liabilities and non-current liabilities. After that, we have what? Equity. But over here, we don't say equity. We say what? Accumulated fund. Over here, we say accumulated fund. Accumulated fund, it can be accumulated surplus or accumulated deficit. You understand it? Then you add your P&L, the profits you got from your statement of financial performance, you add it to it. Now that can liabilities, no, you are done. Now, I'm going to unmute you. So if anybody has their question, he or she will ask. Then we proceed. Someone is asking, say, please, what about secondment? I can't mention all the transactions. I can't mention all the transactions. So please, these are, like I said, they were just what? Examples. Hilary, they were just examples I gave. So if you know secondment is also a transaction. So I'll ask you, what is secondment? Secondment is temporary jobs, right? Temporary jobs, second jobs. So it's related to compensation. So secondment to go to compensation. You understand? I can't mention all the entries or all the transactions. So if you know of any that I didn't bring, you can bring it. It's as simple like that. Pachati has here. Very well, thank you. So I'm going to unmute all of you. In case you have a question, can you ask? Quickly ask, then we go into the next phase of the meeting. So please, I've unmuted all of you. Anyone have any question can ask. Any question? I've unmuted all of you. So if you have a question, this is just a structure, okay, of central government financial statement preparation. Perfect, 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 perfect. So now let's go into solving the questions. If no one has any question, then I proceed. Please, I've unmuted all of you, so kindly mute yourself. So let's continue. Please, so there are two questions here. There are two questions here. So let's pay attention. So let's go. The following are balances extracted from the consolidated fund. Consolidated fund, telling us that this is central government. Balance extracted from consolidated fund account for the year ended 31st December 2017. So that is that. So automatically you have to start prepare your mind to answer questions what consolidated fund. Let's go to the second question too. There are a lot of questions, so you have to go and try them yourself. Let's go to question 2. Below is the trial balance of the consolidated fund of Ghana for the year ended 31st December 2020. Below is the trial balance for the consolidated fund for the year ended 31st December 2020. Before we start solving, let me say something briefly. Thank you very much. So please, like I was saying, okay, I shared 2 questions with you, but because of time, I cannot solve all the 2. I can solve only 1. So it will be very prudent for me to solve the second one. Because the first one, it is a bonus question. I say will never bring this question. Do not bring it. They will never bring this question. Even though they brought it before, but then today, if they bring this question, they know students will do justice to it. So I'll solve the second one. Then I'll use the second one to teach you the trick in the first one. You get it? After I solve the first one, the second one, because the second one is having a lot of footnotes. So after I solve that one, then through that one, you'll be able to know how to go about the first one. Do you get it? So let's go. Okay. Please 1 second. Okay, good. So I have the question here. So we have our normal or usual footnote, a trial balance. So please, this is called a trial balance, okay? This is the trial balance. This structure is a trial balance, or the table you see there is a trial balance. Okay, they have the footnote or the additional information. That's the footnote. That's additional information. Okay, that additional information up to six footnotes. Then we have the requirements. So requirement 1, who can read it? I'm gonna say what? Prepare the statement of financial performance. The next one, prepare the statement of financial position. You get it? Statement of financial performance, statement of financial position. Okay, that is that. I'm having issues with my writing pad. I think it's okay now. Okay, good. So, like I was saying, we have to. I'll use the second one to solve the first one, but then the first one will be your assignment. Okay, the first one that can never come, but the second one, there, you have areas in it. So please, quickly, let's start work. Hey, let's start work. 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 I share this with you. Okay, I share this information with you. I share this information with you, so you should all have an idea about this for now. By now, okay. So the first one, please, I said this is called trial balance. This is called trial balance. It has debit and credit balance. Can you see that? Then you have the footnote. Okay. So the footnote always starts with this. Okay. It is the policy of the government to do what? The policy of Control Accountant General to use accrual basis of accounting in preparing the public account of the consolidated fund and financial statements in compliance with the Public Financial Management Act 2016, Financial Management Regulation 2019, and the IPSAS. Good. Second one, II. Inventory in respect of stationery outstanding as at 31st December 2020 cost 80 million and has a current replacement cost of 12 million. Meanwhile, the net realizable value of inventory is estimated at 40 million. No market exists for unused inventory. Ladies and gentlemen, please, there's this notion that when you're preparing financial statements, you have to balance it. And because of this particular notion, what happens? Students tend to waste a lot of time when preparing financial statement. Do you know why? Because once the financial statement hasn't balanced, they are not stopping. And the total number of hours you're supposed to use in preparing financial statement or in the ICAG examination hall is 3 hours. They will waste about 1 hour, 30 minutes. Some waste as much as 2 hours on the financial statement alone. Why? Because they want to balance it. It's a do or die. Unless they balance it, they are not stopping. Hey! This is what students do. And they come out to say that, PSA is difficult. They come out to say that, IC is difficult. They come out to say that, they are not going to pass because they know very well that they couldn't answer all the questions. Please, if you go to the ICA hall and you come out without answering all questions, please know that your chances of passing is very slim. Your chances of passing is very, very slim. That is, if you are unable to answer majority of the questions, at least try all questions. All what you need is 50 marks. So try as much as you can to try all the questions. Do you know the good thing? When you try all the questions, there's a higher possibility of you getting 5 months, 2 months, 3 months, 5 months, 2 months, 3 months. Before they add everything, knowing you're about 50%. If they come out without doing all the questions, trust me, you get 48, 49. I mean, that's where you get around that area because you didn't finish the questions. If you learn like you are learning now, and you go to the examination hall and you go and try all questions and you come out, trust me, you've passed. Know that you have passed. I've been telling my students that I've been writing IC. I've never failed in any IC exams before because the trick is simple. Finish everything. Baby, you get 2 here, you get 1 here, you get 3 here, you get 2 here, you get 5 here, you get 2 here, you get 6 here. You come out and you know that, hey, I've passed. Financial statement is on question 2. So you go and waste all the time in question 2, question 3, question 4, question 5. All these questions, you leave them without solving it. Sometimes to even answer the question, you can do very well, no? Within pressure, then you not finish well. So please, go to the examination hall, do this simple thing I'm about to teach you. Make sure you are going to do everything. You don't have to balance it. And it's not by force for you to know all the footnotes. If you don't know the footnotes, when you come out, come and learn it. Because I know in fact, don't kill yourself. Don't go and kill yourself there. You don't have to die. You are too young to die. So please, do this simple thing. Good. So this is, the examination hall now. Okay. The examination hall now. I've gone to the examination hall. This is a very standard question. This is a standard question that I've been given. This is a standard question I've been given. This is what I'm going to do. Without reading the footnote, what do I have to do? First of all, when you go to the examination hall, first of all, read the question. Go straight to the preamble. What's the preamble saying? Below is the trial balance of the consolidated fund of Ghana. Automatically, it should tell you that this is what? Consolidated fund. This is a central government question because it's saying consolidated fund. So this is a central government question. So central government question, who can tell me the structure of the statement of financial performance? Raise your hand. Without looking, what is structure of the statement of financial performance? The revenue side, because that's the only difference. Who can tell me? Raise your hand. I call you, just mention it's offered. The revenue, how should the revenue be? Yes, Gifty. Okay, we have Nana Yao. Nana Yao, how should the revenue structure be? Please be fast there.
Thank you. The revenue should be tax, non-tax revenue, and then the grant. Another tax revenue, you have the direct and indirect.
Perfect. God bless you. I like the way you're learning. I like, you see, once beside me is simple. So he said tax. But in his mind, no, you know that the tax is what? Direct tax and what? Indirect what? Tax. So please, no one should write, okay? No one should write. I'll share it with you. I'll share the answer with you. Perfect. So as you can see, just focus. So the question is saying that A, statement financial performance for the year ended 2020. B, statement financial position. So I'll come straight to this place. Then right. The question is saying consolidated fund. So you write this man's solution. Those of you too that if you go in the examination hall, then you'll be relaxing. When they say 5 minutes more before you write in fast, when you go in the examination hall, put in your mind that they have said 5 minutes more. So they can write very fast. So write. Please, you get the text for writing this. Oh. You get a tick for writing this. Okay, good, I'm done. Then account revenue. Like our brother said, direct tax, indirect tax. Because the central government gets revenue from tax. Above the central government, local government does not take tax. Yeah, common sense. Please, I'm not insulting anyone. No. Don't mind me. It's one of those things I say just to ginger you. Then have grant. Good. So you have the expenditure quickly. Compensation, use of goods and services. We have consumption of fixed assets. We have public debt, right? Public debt towards interest. We have social benefit. We have subsidy. We have 1, 2, 3, 4, 5, 6. And here is you. Grant. 6, 7, 8 other expenses. So our total expenses. Total. Please, you can use your tongues. You can use your tongues sometimes. Because when you're marking, they mark the figures. Okay, because of time. Don't go and relax yourself. Oh. You are doing about 10 sub questions within 3 hours. So if I were you, I'll use only 30 minutes to 45 minutes for this. Don't use more than 45 minutes. And make sure you're finishing within this time. Make sure you're finishing. If not, you focus on balancing this thing. At the end of the day, the rest that are very important, you leave them out. Good. Next one, consolidated fund. Consolidated fund. Somebody can write government of Ghana. Anyone you write is correct. You can decide to write government of Ghana. You can decide to write consolidated fund of Ghana. Anyone you write is correct. You can decide to write a two. That's why I brought it. So this is statement of financial position. Asset position 31st December 2020. I like neatly. This is balance sheet. Balance sheet. And you know that balance sheet, no, this thing, this is how you write it to. Non-current asset. Look at the trick. Leave space. Leave enough space. Come and write current asset. Now it neatly. Leave enough space. Come and write current liabilities. Leave enough space. Right? Non-current liabilities. You see the way I'm writing? This is not my writing. No. My writing is nicer than this. By examination pressure, I will not write. I will not take my time in writing small. When you finish and you say 5 minutes before you be shaking. No. Accumulated fund. Accumulated fund. Then surplus or deficit. Do you know this surplus or deficit? This is the surplus or deficit that I'll get from the statement of financial performance. Over here, the finance I'll get is what I'll bring here. Apart from that, this will be given to me in a question. But this one, the finance I'll get there is what I'll bring here. So this is what you do. First 2 pages. This is what I'm doing my first 2 pages. This is what the question says I should do. I'm done. How many seconds will it take you to do this? I'm done. In case the question asks you to prepare statement of assuming, even though it's not part of this, but because you are learning, let me include C, statement of change in equity. So I'll write consolidated fund. Statement of change in accumulated fund for the year or asset. Then you write it. Okay, I'm done. So that one too, everything 1 page, everything 1 page. Don't answer more than 1 on 1 page. I'm done. Okay. If they bring any other thing, you do it. Don't worry. So the next one, note to account. So you write note to account. D. Consolidated fund. Write neatly. Consolidated fund. Note to account. Please, ladies and gentlemen, the note to account is the same as the working. Whether the question asks you to prepare note to account or not, please bring it. Note to account, no, whether they ask you prepare note to account or not, please, ladies and gentlemen, you are supposed to prepare note to account because you have to show working. And I'm saying working, no, it's the same as the note to account. The workings is the same as the note to account. Perfect. Now let's go. I. Note to account. I write this financial statement is prepared using Accrual basis of accounting. Accrual basis of accounting and is in line with IPSAS standard. You know, saying IPSAS standard is tautology, but because I want you to understand. But if you are doing that, just say that it's in line with IPSAS, because IPSAS is International Public Sector Accounting Standard. So you don't need to write International Accounting Public Standard and standards. Don't write IPSAS. Write everything in full. International Public Sector Accounting Standard. Okay, so you are telling them that the financial statement is prepared using accrual base of accounting and not cash base of accounting. So anybody that takes this financial statement knows that, oh, it is prepared using accrual and not cash. First thing you write, it is mandatory. 2, you can talk about any other policy, but I'm limiting you to write this one. The consumption of fiscal capital is on straight line. It's on straight line base. The consumption of fiscal capital is on straight line base. You see, consumption of fiscal capital is also depreciation. It's also called depreciation. In fact, depreciation in the private sector and the public sector, consumption of fiscal capital. So you telling them that, oh, when we calculate the depreciation, you use a straight line method. Key to the understanding of the financials, but you didn't use reducing balance or you didn't use some end of years date. You use a straight line. And the estimated useful life of the asset are column. The estimated useful life of the asset are column. Now, what the estimated useful life of the asset? It is given in a question. Just list the estimated useful life. So this is the estimated useful life. Okay. We have motor vehicle 5 years, equipment 10 years, computer 5 years. This is the estimated useful life. So motor vehicle 5 years, 10 years. So you just list them are as follows. Motor vehicle 5 years, equipment 10 years. So this is just computer 5 years enroll with 10 years, right? Okay. Computer 5 years. Enroll with 20 years. Anyway, this is the second policy. Please, this one I've not said anything. No. You are just passing information to whoever is coming to use the financial statement that, oh, this financial statement is prepared using accrual base. There are different bases of accounting. You are telling that this financial statement is on accrual basis of accounting. And secondly, to the consumption of fixed capital is on a straight line because there are different types of consumption of fixed capital method. You can use reducing balance. You can use end of years decade. But you're telling them that, oh, it's on a straight line. And these are the estimated useful life of the asset. Finish. Okay, this is just an information. It's not part of the question. You have to know them. Of course, you have to take this from the question. Go to 3. Tell them that all amounts are in Ghana cedis. Okay, all amounts are in Ghana cedis. How many zeros? The question, how many zeros the question raised the power? Okay, million. All questions are in million. So that in case you forget not to bring it, they will know that you have already told them all amounts are in what? Million. Anyway, this is also not part of the question. You have to know some of these things, okay? So that in case, now let's go to the real thing. 4. Write the revenue items, direct tax. Indirect tax. Leave space. 6. You have non-tax. We have 7. Grants. So that any amount in a trial balance that is belonging to them will be posted here. We have 8. Please, 8. I'm supposed to write the next one, which is compensation, the expenditure. If I go through the footnote, the trial balance, any amount that belongs to compensation will be put here. We have 9. Goods and services. If I go through the footnote, trial balance, any transaction that relates to it will be posted here. Then I have the next one. 10. As and when we get it, we'll write it. We are supposed to write all of them, but because of time, we cannot write all of them. So as and when we come across, so let me write some, for instance, subsidies, social benefits. In fact, as and when we come across them, we'll come and create a ledger for them. Okay. As and when we come across them, we'll create a ledger for them. So don't worry. So we are done. We are done. So let's quickly go to the question. Then we start. So the first one. Let's start. See, we have debit side and have credit side. True of us, true. Okay. So the debit side. Please, accounting equation. Asset equal to capital plus liability, right? So please, asset is having a debit balance. This one is a credit, You understand it? So please, on the debit side, you have your asset here. Debit side. On the credit side, you have your liabilities, and what? Capital. Please, in public sector, we don't call capital. Capital is called accumulated fund. In public sector, we don't call it capital, we call it accumulated fund. So please, anyway, it's accumulated fund, yeah, it means capital. Do you understand it? So if you want to find your accumulated fund, please go to the credit side. Don't go to the debit side. If you want to find your liability, don't go to the debit side, go to the credit side. Anything I find on the debit side, yeah, is an asset. Remember. So if I want asset, I'll go to my debit side. Don't go to your credit side. If you want asset, if you want liability, go to your credit side. Don't go to your debit side. I'm bleeding with you. So what I'm trying to tell you that asset is on the debit side, whilst liabilities is on the what? On the credit side. We are done. That's the first part. The second part is that expense has a debit balance. Expenses is at the debit side. All expenses are at the debit side. And all revenue are at the credit side. So if I want revenue, don't go to the debit side, go to the credit side. Listen, you have to know this thing. As a chartered accountant, you don't tell me you don't know the balance of expense. Expense is having a debit balance always. And revenue is having a credit balance. We are done. We are done. Revenue is the same as sales, okay? It's having a credit balance. We are done. We are done. So if I want revenue, I'll go to the credit. If I want expense, I'll come to the debit. If I want asset, I'll come to the debit. If I want liability, I'll go to the credit. Or if I want capital, I'll go to the credit. Agbena. Agbena. Any question? No question. Shall we proceed? Yes, sir. It's your network, so maybe go off. Okay. When my board was misbehaving. Okay, thank you. I think I've solved it. Yeah, it's from your side. Oh no, then it's not me. It's okay. Okay, maybe you solved it. Somebody was inquiring. I don't know if that's my network. Okay, okay. Because my network is good, right? Perfect, perfect. So let's continue then. So we have the debit side and we have the credit side. So all assets are at the debit side. All liabilities. So when you go to the balance sheet, that's where we use asset and liability. When you go to balance sheet, when it comes to the statement of financial performance, that is where we use expense and revenue. So if I want to know my expenditure, I come to the debit side. My revenue, I'll go to what? The credit side. Hallelujah. Okay, good. So let's continue. Let's start then. So let's start. Now I want to prepare statement of financial performance. So I come to the what? The credit side because that's where my revenue is. So let's go. Per what we did. See, we have communication service tax. Communication service tax. Is it, what type of revenue is this? Because we know that it's a revenue. So what type of revenue is communication service tax? I'm unmuting all of you. So please, if you know it, you say it. Okay. Is it direct tax? Indirect tax?
Indirect
What
tax.
type of? Perfect. It's an indirect tax because you saw it, right? So this is indirect tax. Yes, indirect tax. We come to the next one. Pay as you earn. Who else? This is a direct tax. How did I know? Because I told you that any direct tax, no, it's never directly on your this one. I even gave you examples. See, this is non-tax. This one, they've even said it that this is what? Non-tax revenue. Okay, so you see, I'll not come to this, I'll not come to this because they are all what? It's either it's an expense, it's either it's an expense or it's a what? It's an how do you call it? Asset. And that's what I need. I need revenue. So I'll go to the credit side alone. So go to the credit side. You have vehicle income tax. Please, what is it? Vehicle income tax. Vehicle income tax. The tax you pay on your vehicle when you buy a vehicle, the tax you pay on it. You don't share it. Vehicle income tax is a what? It's a direct tax.
Direct tax.
So please, you have to solve more questions. Like I said, it is all in your structure. You remember I gave you some examples. It's all inside. So when you read it, you solve more questions. You know that vehicle income tax. And last time I sent you the direct tax. So if you see it again, it will be a direct tax. Corporate tax is a direct tax. Tax paid by companies is a direct tax. We have customs and excise duties. It's a not indirect tax. Good. We have value added tax. It is what? Indirect tax.
Tax.
We have motor vehicle. Motor vehicle is not this one. It is a liability, like I said. If you find anything here, it's either a liability or what? It's either a liability or a revenue. So once it is not a revenue, then in this sense, we say it is what? A liability. But don't worry, it's accumulated depreciation. Don't worry, we'll come there. Okay. So this one, motor vehicle, equipment.
Hello. I think there was a grant in there. We skipped it.
Okay, we skipped one, eh? Okay, God bless you.
Yeah.
God bless you. Bless you. God bless you. Okay. Yeah, this one, grant. Please look at this. Grant, like I said, every transaction that is found on the credit side is revenue, found on the debit side is what? Expenditure. So, Mr. Cephas, kindly tell me, how will you answer this? Mr. Cephas specifically. Cephas, this one,
Yes, sir.
what does this one mean?
So that becomes revenue to you.
Yes, what revenue?
So it's a grant.
Grant revenue. Grant revenue. What about this?
That
Grant.
becomes an expense.
What
Grant.
expense? Grant
Grant
expense. Perfect. Do you remember we have grant revenue, grant expense? Do you remember in the structure?
Yes, yes.
Perfect. Perfect. So look at this. In the structure, we have grant as a revenue, and we have the same grant as a what? Expense. This is when you are collecting revenue grant from other countries or multinational countries, multinational organization. And this grant is when you are giving grant out to other countries, when Ghana is giving grant out. So when you have grant on the debit and credit side, what it simply means is that it is grant revenue and grant what? Expenditure. Instead of them to split it and write one on top, right down, why don't they put all on the same line? Please do you understand it? Perfect. Now, when you see an asset, look at this. When you see an asset like this motor vehicle equipment, this is the cost of the asset, and this is accumulated
How many
depreciation.
things are doing?
Please, if you don't take, I'll mute all of you. You don't have the chance to talk again. Kindly mute yourselves if you're not.
That be okay fuel. Yeah.
I'm muting all of you. Me, that I do what you muting. I'll mute you right now. You not talk again. So please, when you see motor vehicle like this, this is the cost and this is the accumulated depreciation. All what you have to do is to subtract the accumulated depreciation from the cost and you get the value of the motor vehicle. But don't worry. Okay, we'll do it. Perfect, perfect. So we are done. Let's continue. We go to computers. This one too is an asset. So we did the accumulated depreciation. No, we are not using it here. We want revenue. Treasury bills is not revenue. Domestic debt is not revenue. Payables, external debt, trust fund is not revenue. Other expenditure is not revenue. So we are done with the revenue items. It's just this. So please, this is what you do in examination condition. You see, the more you solve questions, when you see the transaction, you know it. The more you solve questions, when you see the transaction, you know it. Solve plenty questions. There's no trick. I can't teach you that. I've given you examples. So it's like a puzzle. What I say? It's like a puzzle. I say, well, when you see communication service tax, put it under indirect tax. When you see pay as you earn, put it under direct tax. So you have to learn it. Solve more questions to know as and when you meet the transactions, where to put them. There's no trick to it. And obeying one must be heading. Obeying. So please. So let's quickly. After I have identified them, what I do is that I come to my workings and I put them there. It's as simple as that. Okay, how many seconds will it take you to come and write direct tax? I saw pay as you earn. I saw this there. Corporate tax, city, corporate tax, 4626. I saw, yes, that is that. Then sorry. Then the indirect tax. What did I see? I saw communication service tax. Please, because of time, you don't have to go and write everything now. As you can see, I didn't bring a currency because I've written that all values are in what? In millions, Ghana millions, so they should see that. Okay, good. Then the grant revenue, what did they see? We saw grant. This grant, somebody can do it, balance brought down because it's the same thing in the balance sheet. So in the trial balance. Okay, good. So grant, we saw 2516 as the revenue one. Then the non-tax. They gave us non-tax. 2312. Finish. How many seconds will it take you to do this? Okay, just go to the trial balance. Post all the revenue items. Maybe I've posted all the revenue items. Now let's come to the expenditure items. I'm unmuting all of you again. Please behave yourself. Say, please go over the direct and indirect tax again. I had a network challenge. No. Please, when you finish, watch record the video. You get it, okay? Or contact your friends. Or you can even contact me. I'll go write for you. Okay. Good. So
Yeah, will you post the recorded video?
we will discuss that
Yeah,
later.
please, will you? Oh,
We will discuss that later. Good. I'll post them on a Telegram page. I'll create a Telegram page and I'll post it in it so that everybody can have access to it. I believe you're okay with that.
yes, please.
But next time I'll not record. So that those who will not join will lose. Okay, good. Let's continue. So let's come to the expenditure asset side. We have cash and bank. Cash and bank is an asset. We all know that. What about established post? Please look at something. After I have posted them, I have to cancel it. When you write it in the book, you cancel it. When you write in the answer, you cancel it. When you write it, you cancel it. When you write it, you cancel it. When you write it, you cancel it. Do you get it? When you write it, you what? Cancel it. So cancel all the ones you've written. Why do you do that? You do that because it will help you to identify the transactions you have posted and the ones you are yet to post so that you don't leave any out. You see, I nearly left grant out, but when I cancel the ones I've posted, it will left with grant standing in the books, meaning that I'm yet to post grant and I know that, hey, I can major grant. So please cancel it when you post it, okay? Me, I prefer when I cancel, then I write it. When I cancel, then I write it. When I cancel, then I write it. So that I'll not be writing these things here. You too, you have to know the structure that suits you, the strategy that suits you, so that when you go to examination hall, you know what you are going to do. And you have to call which style should I write it? No, be solving more questions. In the course of solving more questions, you know how you can present your answers. Do you get it? Good. Now let's go. Establish position. We've already done it. That is what? Compensation. Okay, this is revenue. Good. Non-established position, still compensation. We have travel and transport, use of goods. Administration, use of goods. Okay, you see, the debit side, seminar and conferences, use of goods. Like I said, any AEBR, foreign travel, use of goods. Any administrative cost BI is going to use of goods. Stationary, use of goods. This is a goods they bought, use of goods. Stationary purchased, use of what? Goods. Okay, good. Pay attention. You come here. Hey, sorry, I've not posted this one. I'm here to post it. Grant is grant expenditure because it's at the debit side. So grant, expenditure, grant. We have subsidies. You see, subsidies always come with subsidies. So this is subsidies. So that students can be able to identify. This one is subsidies. Subsidies for consumption, subsidies for what? Production. We are done. Let's continue. Social benefit is a what? Social benefit is social benefit. State protocol, use of what? Goods. Allowances, compensation. Allowances is compensation because the compensation they give allowance, right? We have domestic debt interest. It's public debt interest. Interest. This one is external debt interest, public debt interest. Okay, motor vehicles is an asset. We will not touch on asset. Work in progress is an asset. Equity investment is asset. Loan, asset. Gold, asset. Judgment debt. Judgment debt is use of goods. Treasury bill. liability, domestic, all these things are credit side, so they are liabilities. We come to other expenditure, Here we. So I'm done with the what? The expenditure side. Go and post them. Quickly go and post them. If they say stop work, do you know you get marks for all the things you have posted? If they say stop work right now, you get marks for posting all these things. You get marks. I don't know. Okay, so compensation, what do you get? We had established post. 13524. We had non-established post. 4016. We had allowances. 300. We had established. I think that's that. This is what we had for compensation. So let's go and cancel it. So once you write them, you cancel them. Okay. So you know that I have written this. I've written this in my books. I've written in my books. So 2. I've written this in my books. So you see, compensation is only 3. I'm done. Okay, let's go to the next one. Use of goods. Use of goods. So use of goods, what do you have? We have T&T 468. We have admin expenses, administrative expenses 6704. We have conference and seminar. You see the way I'm writing? Because I'm in a hurry. I have to finish everything. This one just writing there. I need not to waste time. Okay, you can write shorthands, foreign travel. The person marking, he's focused on what? The final figures. So just stationary. I'm just you go and write annoying shorthands. Some of you can write annoying shorthands. You're writing baby there. Before you realize, they give you baby marks. Before you know, the person has gotten broken heart. You go and write baby. Right? Professional shorthands. State protocol. 100. Judgment debt. You remember judgment debt? You saw judgment debt there. 280. Judgment debt 280. Judgment debt 280. We are done. Okay, this is use of goods and services, the one we saw. Then we saw subsidies. Do you remember? We saw subsidies. So subsidies, you have subsidies on consumption. Subsidies on consumption, how much? 1282. Then we saw subsidies on production. Do you remember? 722. You get it? Good. Then we had another one called what? Social benefit. Do you remember? 11. Social benefit. So you can write balance brought down, or you can write social benefit. We saw social benefit. Please, when you write them, don't close them. Don't close the bracket. Don't add them. Don't add them yet. Adding the last thing you do. Do you get it? Good. So we saw another thing called public interest debt. Don't close them. And when you are writing, another thing is that I'll tell you. Public interest debt. So we have domestic interest and we have external interest. So we have 2906 and have 3482. Okay. So I think that is that. Okay, we had grant to grant. We had grant. What was the grant? Grant, expenditure grant. 1150. In fact, let me make it expenditure so I know that the difference. We are done. Do you get it? Good. So we've posted everything. Okay, we had other expenses too. Other expenditure. Do you remember other expenditure? Other expenditure. We had 1.8. Just posting there too. 04.90. Asa, other expenditure. So after you have written, or what do? You cancel them off. Cancel them off to know the ones you've not used. Okay. Or to know the one that are going to the balance sheet. Cancel this, cancel this, cancel this, cancel this, cancel this. Good. So when it comes to the debit side, we have not used 61350, that is cash and bank. We have used all these. Okay. We have used all we've not used motor vehicles and them. We've not used work in progress. We've not used this one. So good. We've used this. We've used this. So we've not used the rest. The rest is what we've not used. I believe you understand. So this is what you do. Now, assuming they say stop work, all pens down, you get marks for posting all this. For posting all this, you get one tick. They'll mark this. They'll mark all. You get one tick. Tick for all of them. For posting, no, just for posting. You have not started the work, but you are getting all the marks. So now I'm done. Now, this is a strategic place. Listen, now that you are done, so we can now go to the footnote. So let's go to the footnote. The first one is just give you an information that the policy of the control accountant general, and that is just the policy. We are done. We go to the footnote 2. What is the footnote 2? The footnote 2 is saying that what? Inventory in respect of stationery outstanding as at 31st December 2018 million. 2018 cost 18 million and has a current replacement cost of 12 million. Meanwhile, the net realizable value of the inventory is estimated at 14 million. No market exists for the unused inventory. Please, I'm begging you, listen to this analogy. At the end of every year, listen, I'm explaining inventory. I'm explaining inventory because you get a question that has a footnote containing inventory. So understand this. At the end of every accounting year, there will definitely be some of the inventory remaining. Some of the inventory will be remained. The inventory could either be in finished goods or raw materials. Definitely. Let's take raw materials. Definitely, some of the raw materials will be left. Now, that raw materials left is the raw materials you will find in the footnote. So the footnote contains the raw materials that are left. So you went to buy 200 tons of raw material. There's no way you finish using all the 200. There's no way. Even if you finish using all the raw material, you will not sell all your commodity. Maybe you have used the raw material to prepare finished goods. The finished goods, no, you will not be able to sell everything. Definitely there'll be one or two remained. Every year, either raw materials, some are remained, or the finished goods you have produced for sale, no, some are remained. That goods that are remained or the raw materials that are unused, no, you have to value it. You have to put it in a balance sheet. You have to bullish it. So when you go to a balance sheet, you have stock. You have stock. That is the stock you are talking about. The raw materials that are remained at the end of the year, or the finished goods that are still in store, the ones you are yet to sell, no, that is what we call the stock. Are you getting it? So please, I'm pleading with you. Anytime you see an inventory, the inventory talks about what? The remained inventory in the organization. Please, you have to value it. And in valuing it, there's a policy that says that what? You see, in the private sector, we say that what? The cost at which you bought this inventory, let's say there's we have 50 cedis, these 200 tons of raw materials you're going to buy now. At the end of the year, we have 50 remained. We have 50 tons remained. The accounting policy on inventory, okay, that's IFRS or IS2, says that what? Between the cost at which you bought this raw material and the selling price, how much you intend to sell this raw material, choose the what? The least. Okay, choose the lowest. So they say that what? Always choose the lowest between the cost and the what and the net realizable value. Net realizable value means how much you intend to sell it. That's the net realizable value. How much you intend to what? To sell it. And the cost at which you bought it. No, choose the minimum or the lowest. Why are they saying you should choose the lowest? Because they don't want you to put figures in the balance sheet that we may not be able to get. Here. So they're saying you should choose the minimum or the lowest. That's the policy on what? Inventory. So you're supposed to choose the lowest or the minimum between the cost at which you bought these 50 cedis or 50 tons of inventory and how much you intend to sell it. If you are to sell it today, how much will you sell it? Between the two, you choose the lowest or the minimum. That is the policy or the accounting standard on what? On inventory. Between the cost at which you bought it, the value of inventory remained, you have to value it. Value it in terms of how much you intend to sell it. If you are to sell it today, how much will you sell it? That is the what? Net realizable value. The value you get after you sell it. I don't want to disturb you, so I'll not go deep. Okay. If I want to go deep, I'll tell you that's what? How much you sell it, less the cost of sales. And that will give you the net realizable value because I don't want to disturb you. How much you intend to sell it. If you should sell the inventory remain today. What I'm saying is that at the end of the accounting year, there will be some sort of inventory remained in your store. That inventory, you have to put it in the balance sheet because it is an asset to you. So it's in putting it in your balance sheet, you have to attribute a value to it. Because remember, financial statements, everything on the financial statement has what? Monetary value. So you have to put it in your financial statement. That's the first thing. And in putting it in your financial statement, you have to attribute a value to it. And there are two ways of attributing a value to it. It's either you use the cost at which you bought the inventory or the net selling price. So in between the two, choose the minimum or choose the one that has the lowest value. But that is in the private sector. But in the public sector, it goes ahead to say that how much you intend to sell it if you are to sell it today and the cost at which you bought it. Okay, choose the minimum. But if the commodity is to be used in organization, then you have to decide between the cost and the replacement cost, and not how much you are going to sell it. If you are going to sell it, okay, you see some of the public sector organizations, they produce not for sale. Some of the public sector organizations, they produce not to sell, but they produce to distribute free of charge. They produce not to sell. That some of the public sector organizations, because it's a public sector organization, like for instance, in the education sector, they don't sell their raw materials. So that one, you have to decide between the cost at which you bought the chalk which is a raw material. You have to decide the cost at which you bought the chalk and how much it will cost you if you want to buy a new one today. If you want to buy a new chalk today, maybe the chalk you bought it in last year, you bought it at 20 cedis. So at the end of the year, you have to value it. And valuing it, don't choose the cost of the chalk and how much you sell the chalk. Because in the public sector, education is not for sale. It is free of charge. So how much you bought the chalk and how much it will cost you if you want to replace the chalk. So you have the cost and the replacement cost because the chalk is not for sale. But if you are in the public sector and your raw materials are for sale or your finished goods are for sale, then you have to decide between the selling price and the cost. Always it is cost against selling price or cost against replacement cost. Replacement cost is the cost it will cost you to replace it, or the selling price, the cost it will cost you to sell it. So it's always cost versus selling price or cost versus replacement cost. You only use replacement cost if the raw material is not for sale. If the raw material is not for sale, they use replacement cost. So in order for ICAG to confuse you, they will always bring the selling price, the cost of the item versus the selling price and the cost of the item versus the replacement cost. They want to know whether you know what you are doing. I'm repeating for the last time. I said in the public sector, not all commodities are for sale. So if they are not for sale, you, the accountant, in order to know the value of the inventory you have to put in your books, you have to compare the cost at which you bought the raw material versus the replacement cost. Replacement cost is how much it will cost you to replace the asset or to replace the raw material today. If you are to buy a new raw material today, how much will it cost you to buy the same raw material? Okay, so if you get the value of how much it will cost you to buy the raw materials today, you choose the lowest among the two. Why will you choose the lowest? You choose the lowest because they don't want you to put huge figures on the financial statement. Figures you may not be able to get. That's why you're supposed to choose the lowest between the cost of the asset and the replacement cost. That is if it is not for sale because you're in the public sector. But if the raw material or the finished goods can be sold, maybe you are in an industry that you are selling for sale or you are producing for sale. You see, some of the public sector institutions, they produce to sell. So if you are in an industry that you are producing to sell, then you have to choose between the cost at which you bought the raw material and the what and the selling price of the raw material. If you are to sell it today, or if it, even if it's a finished good, a finished goods, finished inventory, how much will you sell it if you are to sell it today? And how much did it cost you to produce it? Between these two, choose the minimum. Please do you understand it? So in order for IC to confuse you, they will always bring the cost of the inventory, then they will bring the replacement cost, then they will bring the what? Net realizable value. The net realizable value is the what? The selling price. Then they will ask you, what value will you put in the balance sheet? The IC will ask you, what value will you put in the balance sheet? You have to ask yourself, this material or this inventory, is it for sale? If it is for sale, then you choose the cost versus the selling price. The minimum between the two figures, the one with the minimum is what you use. If it is not for sale, then you forget the selling price and choose the cost versus the what? The net replacement cost or the replacement cost. Then you choose the minimum between the cost and the replacement cost because you know that this inventory is what? Not for sale. But if it is for sale, it will be the cost versus what? The net realizable value. You understand? Perfect. We are done. But when we go to the private sector, IS2, it's saying that what? The value should be the what? The cost versus selling net realizable value. Because in the private sector, all commodities are for sale. For them, all commodities are for sale. So it's for in the private sector or IS2, it's only addressing cost versus what? Net realizable value. Because all their commodities are for sale in the private sector. But in the government sector, it's not all commodities that are for sale. If the commodities are not for sale, that particular industry, they are not producing to sell, it will be cost versus replacement cost. If they are producing to sell, it will be cost against what? If net realizable value. Asa? Perfect. So let's come to this question. Let's come to this question. So this question is talking about inventory. So look at it. They are saying what? Inventory in respect of stationery outstanding, that is stationery remained. As at 31st December, the stationery remained cost 80 million. So it means that the inventory as inventory, closing inventory. Okay, at the end of the year, the inventory closing inventory is what? 80 million. That's the cost. So we now have the cost. So it will be cost against replacement cost if the inventory is not for sale. If the inventory is not for sale, then it will be cost against what? Replacement cost. If the inventory is for sale, then it will be cost against what? Net realizable value and not replacement cost because the inventory is for sale. Do you understand it? Perfect. So that's one we know. And has a current replacement cost of what? 80 million. So they're saying that this inventory, which cost 80 million, has a replacement cost. If you are to buy a new one today, it will cost 12 million. Meanwhile, the net realizable value, if you are to sell this inventory, the net realizable value, if you are to sell this inventory, we will sell it at what? Net realizable value. We will sell it at what? 14 million. If you are to sell this inventory, we will sell it at 14 million. Do you understand it? Perfect. Continue. No market exists for the unused inventory. No market exists for the unused inventory. What it means is that we cannot sell the inventory. They are saying that even if you want to sell it today, nobody will buy it. No market exists for the unused inventory. It means that the inventory, we cannot sell it. So if you cannot sell it, then obviously we are going to compare between the cost and the what? And the replacement cost. Because no market exists for the unused inventory, meaning we cannot sell it. There's no market, we cannot sell it. So you are going to compare between the cost of the inventory and the replacement cost. So please, you choose the lowest. You choose the lowest between the two, and the lowest is what? 12 million. Therefore, the inventory at the end of the year, it's 12 million. So this 12 million is what I'll send to my balance sheet. So go straight to your balance sheet. Go straight to your balance sheet and go and write inventory. Even though it is 12 million, but it will cost me, even though it is 80 million, it cost me 80 million to buy it. It will cost me 12 million to replace it today. If I want the same inventory, I have to pay 12 million. So why are we using the minimum? We are using the minimum because we don't want to put figures that we cannot get. So that it will be as if we are decreasing a financial statement. We are done. That's the first one. So please, every footnote has two treatments. Every footnote has two treatments. So we did the first one. The second one will be that I'll go straight to my inventory, that's goods and services, and come and write inventory. 12 million. Always subtract it. I'll not tell you the reason, but always the inventory you put in on the balance sheet, come and subtract it here. The inventory you put in on the balance sheet, come and subtract it here. Let me tell you the reason why, even though I will not tell you. Let me tell you the reason why you have to subtract it. The reason why you have to subtract it is that, you see, you've done accounting before, okay? So in accounting, cost, when you want to know the cost of sales, what happens? You say opening stock. You always write opening stock. Add purchases. Opening stock, add purchases. Then come to what? Less what? Closing stock. You always less closing stock. That is why the closing stock, no, I went to less it. You always have to less closing stock. And where can the stock be located? The stock can be located in goods and services. This is why we have stationery purchased. And stationery, at the end of this one, stationery purchased. And we have what? Close this one to stationery. Inventory, the same as stationery. So less closing stock. I believe you understand. So when you go to some books, you see that they will separate the stock. Before the balance of the stock, they go and add it to the opening stock. This one, the goods and services. So please, goods and services is where we put the stocks. All the stocks are in goods and services, or all the inventory are in goods and services. So when you put the balance at the balance sheet, go straight to goods and services and go and less it. Go straight. It's as simple like that. Always, you get a question on inventory. You always get a question on inventory. Always. There'll be a footnote on inventory. The footnote on inventory. The closing stock, no, send it straight to goods and services and go and subtract. And that same thing, no, send it to what? Current assets. That's inventory, 12 million. It means at the end of the year, the inventory still in our store is 12 million. Still in our store is 12 million. Perfect. You are done. So now the first footnote, we go to the second footnote. An established post salary in arrears as a result of salary increment in the fourth quarter of 2020 was 56 million. Established post salary. An established post salary in arrears. In arrears means that what? Yeah, we are owing, we have not paid. It's what? 56 million. And remember, Accrual concept is saying that you record transactions as they what? They occur. You record all transactions as they occur. This is an expenditure. So the moment you incur the expenditure, you have to record it. Don't say that you don't have cash, so you not record it. So please, any arrears, you have to record it. So let's go to established post. So when you go to established post, working, so go to established post. Then come and write compensation. Established post is compensation. So write established post arrears 56 million, because everything is in million. Then this one, a car a day, we are owing this one. So it will go to what? Liability, go to balance sheet. Every transaction in the footnote has two treatments. So you got to write establish post arrears 56. Here 56. Here we are done. That's it. So simple like that. Okay. Public debt interest outstanding. Public debt interest outstanding. Outstanding also means owing. You are still left to pay that one. You've not paid it. Remember, in accrual accounting, you record transactions once they are what? They occur. So expenditure are recorded once they are incurred. Odika, you are owing. You are still outstanding and you've not recorded it. You've not recorded because you've not paid. But accrual accounting say that hey, record every transaction once they are incurred. So this 40 million, if you've not recorded it, go and record it. So this public debt interest, 40 million outstanding. So go to the expenditure and go and write Public debt interest, 14. So public debt interest will go to public debt, right? In here. So right. Outstanding public debt interest, 40 million. Then you are owing it. Once you are owing it, go to liability. Income right. Interest. 14. You are done. You are owing
So
interest 14.
you wrote the interest on the current assets.
Oh, sorry. I intentionally wrote it there. I want to see if you are following. That tells me you are following. That's good. Sometimes teacher have to test your student whether they are following. Good. So we are done. I know some of you will be saying I'm lying, but I don't care. So please, we are done with this one too. Simple like that too. If you understand it, it will not take you more than 3 minutes to do these things. No. And the best way you can do them, please, you see this one, PPE schedule. It should be the last thing you do. Always, PPE schedule should be the last thing you do. Just follow what I'm telling you and do it. PPE schedule should be the last thing you do. Don't do it in between. Perfect. Go to the next one. Vin. The multilateral partners have extended debt forgiveness policy to the government. They have extended debt forgiveness policy to the government, which has resulted in external debt written off amounting to 4 billion in the year. Multilateral partners have extended debt forgiveness to the government, which has resulted in the external debt written off amounting to 4 billion. Please listen. Some of you want to brofo. Too much. We brofo. Some of you want to brofo. Mr. Cephas, you are owing me 4 billion. Mr. Cephas, are you here?
Yes, I'm here.
You are owing me 4 billion. And I'm saying that, hey, Mr. Cephas, may that child fat. I'll not take it again. Take it. How will you record it?
I cancel it from my books by crediting it.
You by crediting it. So how do you record it? Which this one line item will you record it under? Mr. Cephas in table on table. Nyame. Cephas in table. You say you credit it. It's a grant to you. Machosika. It is the same as Mr. Cephas. Is it the same as I've given you, I've dashed you 4 billion?
Yes.
Yes, it's like I've given you fiscal cash 4 billion. So if I give you fiscal cash 4 billion, where will you record it?
Grant.
So instead of giving you fiscal cash 4 billion, I've decided to reduce the debt you are owing me by 4 billion. It's the same thing. But some of you, because I don't give you the fiscal cash, you'll not be grateful. You're not happy. I know majority of you here, you are not seeing the essence of what I'm doing because you are like, it's the same as me giving you 200 cedis. Today, this done. I'm giving you 200 cedis because if I'm charging 200 cedis for these classes and you are enjoying the classes free of charge, it's the same as me giving you fiscal cash 200 cedis. Because it's like I've given the 200 cedis and you have used the 200 cedis to register the class. Do you get it? So you have to go and record it in your books as if you have received 200 cedis from Sir Stephen and you use the 200 cedis to attend a class. So if I dash you, you are owing me 4 billion. I'm saying, oh, fuck that chow. It is the same as you receiving 4 billion. So therefore, you record grant 4 billion. Then you go to your liabilities and go and reduce your liabilities by 4 billion. Debt forgiveness. This is how we treat debt forgiveness. So when you see debt forgiveness in the trial balance, so in the footnote, first thing, ask yourself how much is involved. If it is 3 billion, go straight to grant, revenue grant, and go and write the 3 billion there. Then brofo, hey, brofo, listen. External debt written off. So if your external debt is written off, it means that go to the external debt. Where do you find external debt? Long-term liability. Go and reduce it by the 4 billion or whatever amount, and you are good to go. Simple like that. So simple. I guess students complain, say, but this one they didn't say grants. So why is it what damn? They are saying that what multilateral partners have extended their debt forgiveness. It means you're ungrateful. You are owing somebody. Ghana is owing IMF 7 billion. And IMF decide to tell Ghana, oh Ghana, take the 7 billion. It is the same as IMF giving Ghana 7 billion. Because that money you used to pay the 7 billion to IMF, you can use that money to do other things. It's the same thing. It's like IMF gave Ghana the 7 billion and Ghana decided to go and give it to IMF. Say, oh, take it as the loan reduction or loan payment. It is the same thing. Do you get it? Hey, brofo. Unless something brofo. Multilateral partners extended their debt forgiveness. Perfect. So this one, first of all, you recognize the 4 billion as though you have received the cash. You understand? So go straight to grant. The workings, everything is done in the workings. Everything is done in the workings. Everything is done in the working. Go straight to grant. You see, you don't open so many accounts. Just analyze it and go and write it. Where is the grants, revenue grants? Anyway, so right, debt forgiveness. 4 billion. So it will be 3 zeros. Perfect. Then go to long-term liability, right? Debt forgiveness. So it's going to reduce our debt by 4 billion. Put it in bracket because it's going to reduce the debt there. So we take it into whatever amount you write there, it will reduce it. We are done. That's the footnote. The next footnote. So simple like that. Go to the next one. The last one, of course. Please, this is what? In the year 2019, 8 billion. This is also another area you have to pay attention to. Correction of error. Another area you have to pay critical attention to. So pay attention, open your ears. In the year 2019, 8 billion was spent in acquiring equipment to boost government projects. Okay, I understand. However, these transactions were recognized in account as goods and services expenditure. In the year 2019, this error has since not been rectified. In the year 2019, 8 billion was spent in acquiring equipment to boost government projects. However, these transactions were recognized in the account as goods and services expenditure in the year 2019. This error has since not. Please, when you buy an asset, where do you recognize it? Or where do you record it?
Non-current assets.
Non-current asset. But they recorded it as what? Goods and services. So obviously, it's an expenditure. It's an error. Okay, now listen. When you record it as goods and services, you have treated it as an expenditure. So when you treat it as an expenditure, you go ahead to subtract you reduce the revenue by that expenditure. Can you see that?
Yes.
Because they treated it as expenditure and they reduce the revenue. So you have to correct it. Okay. Now they treated it as expenditure and they reduce the revenue. So you have to add it back to the revenue. You have to add this back to the revenue. They have reduced the revenue by the total amount of what? 8 billion, because that's the cost of the assets. So you have to add this back to the what? To the revenue. That is in correcting it in 2019. So go back to 2019. They reduced the revenue by 8 billion because they treated it as a what? Goods and services. So go back to 2019. Go and take the revenue of 2019 or go and take the net surplus or deficit for 2019 and add back the 8 billion. Add back the 8 billion. But the question is, where do you get the 2019 financial statement from? The question didn't give it to you. Okay. Moreover, we are now in 2020. So if you are in 2020, go and look for the total profit or loss for 2019. Total profit or loss for 2019 and add back the 8 billion. Ladies and gentlemen, in order for you to correct an error, always add back the error. Keyword, always add back the error they did. So listen, in 2019, 8 billion was spent in acquiring equipment to boost government projects. However, these transactions were recognized in the account of goods and services. Now you ask yourself, if you buy an asset, do you record it under goods and services? No. So once you are aware that this is an error they made, please add back the error to the accumulated fund. Add back the error to the accumulated fund. Add back the error to the accumulated fund. Add back the error to accumulated fund. In correction, this is what you do. Add back the error to the accumulated fund. So please, so that is what you do. So quickly, let's add back the error to the accumulated fund. Okay, change of correction of error. Always add back the error to the accumulated fund. Why are you adding it back? Because they reduced the revenue by the 8 billion. So in order for you to correct it, you have to add it back to the profit of 2019. And the profit of 2019 cannot be found. The profit of 2019 was added to the accumulated fund. Profit of 2019 was added to accumulated fund. So in order for you to correct it, add back the error to the accumulated fund. It means that you are reversing the transaction they made. They subtracted 18 billion from it. So you have to add back the 18 billion in order to what? Nullify it. So this is what you do. So we search for accumulated fund, add error committed, the error they made, add it back, less depreciation, corrected, accumulated fund. That's what you do. Now, like I'm saying, just go and look for the accumulated fund. The trial balance will always give it to you. Add the error they committed, add it back. Less depreciation, okay, or less consumption of fixed capital. Why depreciation? Because you see, they bought the asset in 2019, assuming the asset was recorded as a PPE, assuming the asset was recorded as a non-current asset, assuming the asset was correctly recorded, what would have happened to the asset at the end of 2019? They would have calculated depreciation. True or false? True. Assuming they recorded the assets, assuming they didn't make the error, they recorded the asset as a non-current asset in 2019. At the end of 2019, they will account for depreciation, or they'll calculate depreciation on the asset. The 8 billion, they'll calculate depreciation on the 8 billion. But because they made an error and they sent it to goods and services, they didn't calculate depreciation. So if you are correcting the error, they subtracted it and you are adding it back. Then when you add it back, you too know, because the asset was bought in 2019, you have to calculate depreciation for 2019. That is why we calculate depreciation on this asset. Because they sent it to goods and services. We didn't see the assets when we were calculating depreciation. So now that you are correcting it, add back the error, that is the 8 billion, then calculate depreciation on the 8 billion and subtract it, because that is what was supposed to be sent to goods and services and not this. I'm not making sense. Because myself, I'm understanding what I'm saying. So that's how you correct the error. Good. So let's quickly do it. So in correcting the error, I'm talking about this one, the last one. In 2019, 8 billion was spent in acquiring equipment. So quickly, write accumulated fund. Let's correct the error quickly. Anytime they make a mistake, you have to correct it first. And this is the strategy used. So accumulated fund, go to the question, trial balance, look for accumulated fund, look at accumulated fund. Please, under normal circumstance, where is accumulated fund supposed to be? I told you accumulated fund is the same as capital. Accumulated fund is the same as capital. It's supposed to be at the credit side, right? But we are seeing it at the what? At the debit side. It's supposed to be at the credit side, but we are seeing it at the what? At the debit side. So what does it mean? What it means is that
Negative.
it will be a negative number. What it means that to be a negative number, because if we found it at the credit side, then of course that's a positive number. But if it changes position, then to be at the what? It will have a negative what number. So good, let's go. So negative 29516. Accumulated fund will be negative 29516. Here we add the error. They subtracted 8 million as an expenditure. It's not supposed to be an expenditure. It's supposed to be an asset. So add back the 8 million. Or cost of equipment. 8 billion. All figures are in million, so 3 zeros. Less depreciation. So let's calculate the depreciation. So the 8 million. How many years are we supposed to? 8 million is an equipment. So 10 years. Equipment is 10 years. So we bought it in 2019. So in 2019, 10. So in 2019, this would have been a depreciation. So you get 800. Less it. Answer. Answer. Please answer quick.
Negative 22316.
Bracket means negative. I'm done. I'm done. So please, this is the correction. So in the correction, how do you post it? In the correction, how do you post it? So please, we are done. Okay. We are done. So this one, and this one, they go to the PP what? Schedule. I believe you understand. When I'm doing the PP schedule, you send it there. This one, go to the PP schedule. This one to go to the PP schedule. Then this one, you go to change. Statement of change in accumulated fund. Statement of change in accumulated fund. And I was saying, who said there's been a change in accumulated fund? It was this. But accumulated fund has now reduced to this. So when they ask you prepare a statement of change in accumulated fund, this is what you do. And then you add your surplus or deficit to it. Asa? Okay. Good. We are done. So you understand?
Hello, sir. Yes,
Please
sir.
come in.
So, Mr. I want a question.
Okay.
Concerning the depreciation, would we have to add it to the consumption of fixed assets?
That's what I'm saying that this will go to a PP schedule. This will go to a PP schedule, but we not add it to consumption of fixed assets for 2020. This is for 2019. Remember?
Okay, yes, sir.
This was supposed to be done in 2019, but because we sent it to goods and services, we forgot to do depreciation for 2019. That is why we will subtract it, and then you do the PP schedule. If I let you do the PP schedule now, okay?
Okay, sir.
So let's do the PP schedule. Hey, if you are here and you are not able to pay PP schedule, it is serious. Like, frankly speaking, it means like 5 marks there, lose even before you do it. 5 marks they are losing it. So please, quickly, let's do PP schedule. This is how we prepare PP schedule. It's not difficult. What are the assets?
Motor
This one,
vehicle, equipment.
1 second. Okay, so let's proceed. So we have motor vehicle. Please take a screenshot. Someone should take a screenshot. Okay, we have motor vehicle. So, wait, look at something. We have motor vehicle. So you just write motor vehicle. Yeah, here. Or the PP schedule, you just write motor vehicle, equipment, computers, railway. After I write this, then you write a cost. You write a cost here. You write a cost here. You write a cost here. The cost in the question. Then you write accumulated depreciation. You write accumulated depreciation here. You write accumulated depreciation here. You write accumulated depreciation here. When you finish, then write depreciation for the year. Asa. So let's do it together. Okay. Good. So PP schedule. We have
Motor vehicle,
motor vehicles.
equipment,
We have equipment.
computers,
Yes. We have computers.
then railway.
Railways. Total. So please, Fiadio, this is what you've done. You've not done anything. They are all given to us in a question. These are the assets. Can you see that? These are the assets. Then we have cost. How much did it cost us to buy them? That's the cost. So the cost, where do you get it from? Look at the trial balance. See, you have computer
The debit
cost,
side of the trial balance.
equipment. Perfect. The debit side of the trial balance. I told you that all assets are the debit side, at the asset cost, right? So this is the what? The cost. How much you bought it? Railway, the cost. Can you see that? These are the assets. So just write these ones there, and you get text for writing it. They have accumulated depreciation. This is the accumulated depreciation. We'll come there. So let's go. Cost. So please take a screenshot.
Okay. Motor vehicle.
Are you okay? So let's go. So the cost, just come and write it. Just come and write them. Okay, cost. Motor vehicle, 4,800, right?
Yes, please.
Equipment.
8,400.
Computers.
18,400.
Rory,
5,000.
perfect. Was there any addition? Did you buy any asset in 2020? No, we didn't buy any new asset in 2020. But then there was an asset we bought in 2019, which we forgot to add it to the cost. So therefore, let's bring that asset to the cost. We bought this asset and we sent it to goods and services, but now we have corrected it. So we are bringing it back. Remember, I told you that. This 8 and this 800, they to go to a PP schedule. And how does this go to a PP schedule? Mistakenly, no, we sent it to goods and services, but now we are bringing it back. So this one go to a PP schedule. So this 8,000, add it to the what? To the cost. Because this is a cost, an asset we bought. This is dash, this is that. We are done. Can you see that? So give me the total cost of the asset. This will be 4,800. Please add the two. You get what? 16,000 what? 400, right? We have
Yes.
18,400. We have 5,000. Less accumulated depreciation. Accumulated depreciation, or use accumulated consumption of fixed capital. So accumulated depreciation, the one on the credit side. So what are they? Give it to me.
Motor vehicle, 1,920. 1,920.
Bracket. It means you are subtract accumulated depreciation. You see it then?
Equipment, 1,680.
1,680. Next.
Computers, 5,240.
This one.
And
No wait. Dash.
non-foreign. Yes.
Yeah, dash. We are done. Yeah, all these are giving a question. We now questioning. The only thing I added was the 8,000. We are questioning. These are the debit side, and all these are the credit side. You get tick for writing all this. Nothing difficult. Hey. Nothing difficult. Where is the cost in the question? Cost in the question. Cost in the question. Cost in the question. And I brought the addition because this one they made a mistake and sent to goods and services. We have corrected it. So additional. Do you have additional accumulated depreciation? Yes, you have additional accumulated depreciation. The motor vehicle, no, they made a mistake and sent it to goods because of that. They didn't calculate depreciation. We have calculated depreciation. So the depreciation we've calculated was what? 800.
800.
800.
It's an answer. Yeah, mistake no more yeah na ya correct. Into ya tefimu. In 2020, we want to get the value of what? The equipment they bought in 2019. So subtract it from it. That is it. Yeah, Asa, now let's calculate the depreciation for the year. Let's calculate the depreciation for the year. So please, in calculating the depreciation for the year, anything, okay? You see, you always take the cost, how much you bought it, the cost divided by the total number of years they give you in the question. So when you take motor vehicle, for instance, how much did they buy it? They bought at 4,800. 4,800 divided by the total number of years. So motor vehicle, 4,800 divided by how many years? 10 years. Okay, 5 years. Motor vehicles divided by 5 years. So 4,800 divided by 5 years. Is equal to what? 240. This is the depreciation for the year for motor vehicle. Anything. Equipment, take the cost. Roughly the cost divided by the total number of years. That's why the question will always give you this. Because you this one to get the depreciation for the year. So if the cost is 5,000, 5,000 divided by 10, because that's it. If it is equipment, if it is computer, what is the cost divided by the number of years? What is the cost? Asa, hey, idea is simple. So let's do it. So please, motor vehicle, it will be 2,000. Depreciation for the year will be 2,400. So 240. 2,240, 4,800 divided by 5, 240. Please, what about this? Remember, with equipment, we have 8,400 and 8,000. So the two make it 16,400. So 16,400 divided by 10 years. Divided by 10 years, you get 1,640. It's depreciation, so put it in brackets. Now, this one, computers. Computers is 20 years or so. So the cost 18,400 divided by 20 years. Please, what do you get? Yes. Okay. Computer is 5 years divided by 5 years. 18,400 divided by 5 years because this is the cost. The cost. So cost divided by 5 years. Please, what did you get? Can you unmute yourself? What did you get? Can you unmute yourself? 18,400 divided by 5 years. What do you get? So divided by 5. 18,400 divided by 5. What do you get? Unmute yourself, please. Oh. Unmute yourself. Oh. Unmute yourself. Okay, sorry. Now unmute yourself, please.
Hello.
Yes,
Hello.
a motor
Yes.
vehicle,
Please, the motor
depreciation,
van,
the figure.
there was an error with the figure. It should be 960.
Oh, sorry.
Yeah.
Let me correct it there. So motor vehicle is supposed to be 960. Which one? This
Yeah.
one, eh?
Yeah, the current
Yeah, the
inflation. Yeah.
depreciation.
Okay. 960. I intentionally did that too. I wanted to see if you're following. Okay, good. Motor vehicle, what did you get? 18,400 because this is the cost.
Okay,
It's
that is
3680.
3680.
30.
3680. 80.
Okay.
80.
Oh, okay.
3680.
Then this one.
It's 250.
I'm done. So you see this one. This is the consumption, depreciation for the year. This is what we send to depreciation. Balance. This one, statement of financial performance. Consumption of fixed capital. It is this one. Depreciation for 2020. This is what you send there. This one. This total. This one is what you send there. So please add all this for me. What did you get? This, and this. What did you get?
6530.
So this amount, 6,530, is what you bring here. Here. That's what you bring there. Maybe, please. Now let's do this quick operation for me. Now, the cost, which is 4800 minus 1920 minus 960. Please give it to me.
It's 2880. Which one? All of them.
This one.
Hello.
Yes. Oh, what about this
Oh.
ones?
It is what? No. Hold on.
Yeah, the first one is
This one is
1920.
1920. The first one, 1920.
What about this?
180.
What about this one?
948.
This. 9480. Okay, what about this?
4750.
Good. 4750. I'm done. So you see this motor vehicle equipment, computer and railway. Go to the balance sheet. When you go to the
Please,
balance
can I
sheet.
confirm? Can I confirm the second one?
Okay.
The equipment.
The equipment is okay.
12280.
12280. The 2 is 2.
So I had a network challenge. Okay. So I'm saying you give me the figures, the values. Okay, so motor vehicle, please, what did you get? Hello? Can you unmute yourself? Can you unmute yourself, please?
1,920. 1,920.
Give it to me. 1,920. Yes, the equipment.
Yeah.
12280, right? Computers,
Yeah.
what did you get?
9480.
Your way.
4750.
Okay, we are done. So we are done with all the postings. As you can see, I've posted this, 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 I've posted this. I'm done. I'm done. I'm done. You see this
Hello.
one?
Hello.
Come in. Come in.
Can I ask a question?
Oh, ask a question. Feel free.
Instead of taking what's in the motor vehicle and everything at the balance sheet side, can you just send it the total balance of the consumption of you did to the as PPE that place?
Can you add all this and
Can
write
you
that
send that PPE, yes, the total figure over there, the
Perfect.
total figure you get over there? Can you send it to that as PPE? Yeah.
Perfect. Perfect. That's the right thing to do. Okay. I mean, that's the right thing to do. To add everything and send it there. But you know, this is about text. Do you get it?
Mm.
This examination is about text. Okay, the number of texts you get will determine the total marks you are going to get. Do you understand? So
Yeah.
that is why
This
I
was
advise
too
my
much.
students. That's why I advise my students to split it. It's a strategy. Okay, don't tell anyone. Okay, so instead of lumping it up and putting it there, you spread it and you get it there, you get it down there. So then they get plenty text. Do you get it?
Yes, sir.
So it's a strategy. Okay. Don't tell anyone. No. Okay, good. Let's proceed. But you can just add everything and send there, but then you get only one tick for that. Once you can spread it and get small ticks there. Okay. Okay, good. We are done. This brings us to the end of the work. You are just going to the trial balance and we're doing the posting. Okay. We see once you finish treating everything in the footnote, you can now add your what? You can now add them. Okay. So come here. What the total? What the total here? What the total here? What the
Direct
total here?
tax.
This one is only one. So please, what do you get here?
13,882.
God bless you. What about this one, please? Please, all of you should partake.
14,123.
Perfect. What about this? Right? So you add everything. Now that I finished treating all the footnotes, you can add everything. So let's go. Please take a screenshot. All of you take a screenshot.
Yeah. The total.
Do you have any issue with that?
14,146.
Which one? This one.
Indirect. Yes, the total. 14,146.
14,146 rather.
14146.
Yes.
Oh. Like this.
Yes, sir.
Okay, good. So take a screenshot. Let's go. All of you take a screenshot. So we go. Just go and post it. Today the last thing you do. So give it to me. Come here. 13. Yes. 316. Direct tax.
882.
Okay. Indirect tax, please.
14146.
That non-tax, please.
2312.
Then this one is what? 4.
66516.
6516.
6.
Zero. Again, don't find the total revenue yet. Come to the expenditure. We are after the multics. So the expenditure to kindly add all of them, because once you finish treating the footnotes, there's nothing more you have to add. Okay.
Please,
Compensation.
can I confirm the direct tax?
Please come again. You have a question regarding the directors.
I want to confirm the figure.
Oh, don't worry yourself with the confirmation. You are not after the total balance. The concept is what I'm looking at. So add the compensation for me, please. Quickly add them. Quickly. Somebody should add the compensation. Another person should add goods and services. Another person should add total public debt interest.
The compensation.
And I should add the subsidies. Quickly. If you can tell me. Yes, go.
Goods and services.
17,896.
Which one is that, please?
Compensation of employees.
How much?
17,896.
Okay. Goods and services. Somebody said. Yes.
11780. 780.
Okay. 117.
Subsidies.
Subsidies.
Subsidies
Okay.
2004.
2014.
No, 2004.
Okay, thank you.
Public debt. 6,402.
6,400. Okay. This one is only one. This one is only one. This one is only one. So please take a screenshot. So you have compensation 17,896. This one 11,780. Take a screenshot. 2004 6402. Finish. Hey, we are in can't work in home. We are done with the work. The important we are done. We are just adding. This is not part of the work. We are done with the work. We ended the work at the TP schedule. They can just adding and posting. Okay, let's go. This is not part of the work. So if you have, you can go to work. We are done with the work. Okay, let's go. Compensation, please. Give it to me. Total. Hey, Ugu Seku.
17896.
8916 or 96.
96.
Okay. Next one. Goods and services, please.
11780.
Perfect. Public debt interest.
6402.
6402. Social benefit.
760.
Subsidies.
2004.
Grant.
1150.
Other expenses. Okay, good. We are done. So give me total.
Sir, the grant, you wrote 1156 instead of 50.
Oh, okay. Thank you. So give me the total. So we are done now. As you can see, every hey, no one with total. Oh, you're scared to mention it.
48,300 no, not that one. So that one is 36,856. 36.
Okay.
856.
856.
Mm.
Okay. Give me the total of this one.
The total The total expense is 48,322.
Good. So this is so it will be deficit.
Yes.
Deficit will be
Of
equal to
11,066.
36 856 minus 48,322. So you subtract this one total expense from total income, okay, or total revenue. Please, what did you get?
11,466.
11,468.
6.
So this total deficit, put it in brackets. So this total deficit, when you get it, what do you do? This one, when you get this amount, the first thing you do, if you prepare change in equity, if you prepare change in accumulated fund, okay, if I like prepare the change in accumulated fund, that was given to us in the question was what? We already did it too. We are just repeating it.
29516,
right? It was on the debit side. 29516 debit. So put it in bracket. Right? Add equipment. Error. That error. Less depreciation. That's 8,000 divided by 10 years, which is 800. Less it. Then the answer you get now, you come and say add the deficit, which is 11. What do you get? 11 what? 466. 466 is in bracket. Please, what do you get for this? Then give me change in accumulated fund. Please give me the answer. What do you get for this one first? And what do you get for the total?
36716.
What is, come again? Which one?
36. Oh.
Here. No, here. 36. What do you get? 36 what?
No, you get 2 2.
2
316.
Okay, then less 11,466. What do you get? You guys are not participating. No? If you don't participate, how do you understand?
33782.
36.
33.
Hey, are you sure it's
Yes, sir. There 22,316 is a negative.
782.
Okay, so 33.
782.
Also negative.
Yes.
So please. This amount, you see this amount, 3378 is what is going to the balance sheet here. It will come here. 33782. But you see, I brought the total here. If you want plenty marks, don't bring this one here. Bring the new accumulated fund. That's the change in accumulated fund. You see, they have adjusted the accumulated fund and they are now getting 22316. So come right. 22316. Then bring the surplus 11,466. Okay, I'm done. So in this sense, when you add it, you still get the same 33, right? Okay, good, I'm done.
Okay.
Please go to the after I'm done posting everything. What do I do is that what? I'll come to the trial balance. So the trial balance comes to the debit side. Anything if not posted, I've done this, I've done this, I've done this, I've done this. Anything if not posted, like for instance, work in progress, 400. We have work in progress. We have equity and investment 1960. We have loans and advances 1, 2. So we come and post all of them. So please, work in progress is a non-current asset. Equity is a non-current asset. Gold and other reserves is a non-current asset. So you bring all these things there. So please take a screenshot. Take a screenshot. So we have work in progress. Please, in public sector, equity is a non-current asset. You understand? Loans and advances is a current asset. So let's go quickly. So give it to me. Work in progress. How much? Oh, you didn't
400.
take it.
400.
What else?
Equity and security investment.
1960.
How much? 1960. What else?
Loan and advances.
Loans and advances will come to current assets. Because I'm saying advance. Advance is short term. Advance
So
is
we are
short term.
done.
So it comes to current assets. How much? How much?
1120.
What else?
We have gold and other
Gold.
reserves.
Gold and other reserves. It's also non-current asset. How much? How much?
That is 1620.
1620.
You see why you have to be canceling? If you don't cancel, you'll be wasting time in posting. Where we? Have you finished? Is that all?
I think there is cash and bank at the beginning of the trial balance.
Cash and bank is true. Cash and bank. So let's go and look at it. There's a cash and
The
bank.
first transaction.
Cash and bank. So 61350. So let's go and write it. Cash and bank. God bless you. Even if you didn't tell it, I would have seen it because it will be the only one remaining. 61350. Oh, but some I say, right? I've been grateful, and I'm telling you, even if you didn't say it's great. That is why I'm canceling. You see, that's why I'm canceling. So if you don't cancel, it means you've not passed it. You get it?
Yes, sir.
So we've canceled this one. It means you've passed it. So we are done with the debit side. Go to the credit side. So see, financial statement you can be paid very simple. Very, very simple. Very, very simple.
Please, the rent received.
This one, we didn't cancel it. You've canceled it. Please, anything if not cancelled, it is by mistake. We've treated everything for now.
Hello.
Come in.
Rent receivable. Rent receivable.
Rent received.
Rent receivable. However,
Current
It's
asset.
after what?
So that's after other expenditure. Rent receivable.
Okay. Hey, so who cancelled it?
You cancelled it just now. Just now you cancelled it.
Who me?
I think maybe
If I've not cancelled, how did I
yeah.
cancel it?
Maybe
Okay,
it is because when we are cancelling out the assets.
Thank you. 1600. It means you guys understand what I'm saying. You understand what I'm saying. The reason why I have to cancel. Okay, that's good. Me share that pan. I'm share there. It means you are following. That's good. Okay, good. Let's go to the credit side. So credit side have liability there. Is that also? So the liabilities, this is it. So please take a screenshot. Then after that, to cancel or once we pass it. You see, so that you don't waste time and go and read everything again. It's only the ones you've not canceled that you go to. Don't go and waste time. Okay, let's go. Let's go straight to the liabilities. Once you've taken a screenshot, please mention them and let's post them quickly. Let's go.
Treasury bill.
Treasury bill, please. T-bill is a short-term liability. You see, for us, we the citizens, it's an asset, but to the government, it's a liability. He's collecting it from us. So he has to pay within 3 months. It's a short-term liability. So T-bill. How much? How much? How much?
22240.
It's 222.
The 2 is 3. 22240.
Okay, what else? Please, what else?
Domestic debt.
Domestic debt, long-term liability. How much?
26924.
What else?
Payables.
Payables. How much?
34844.
What else?
External debt.
External debt. It's a long-term liability.
Yes, sir.
How much?
45726.
5726.
Okay, good. What else?
Trust fund and deposit.
Trust fund. Please listen. Trust fund. Any fund is a current liability. The government is just holding it in trust. That money, we deposit it to the government. He will just hold it in trust. It's a short-term liability. Any fund BI is a short-term liability to the government. The only long-term liability are the domestic debt and the external debt. Those are the only long-term liability. Apart from that, every liability BI is a short-term liability. I've told you. Trust fund. Hey, you said what? Something fund.
Trust
Okay, it is
fund
trust
and deposit.
fund. How much?
4470.
What else? That's all.
Yes,
Please,
sir.
ladies and gentlemen, I'm done. I will not worry myself and come and add them. When you get here, you can stop and move on to the next question. Don't add it to. Don't add it to. Do you know why you need to add it? If you don't add it, you don't know whether you are right or wrong for it to disturb you psychologically. But if you are very sure, like myself, add it. So let's add it. So please, current asset plus non-current asset should give me total asset. And total asset
sir.
should be equal to liabilities and accumulated fund. Do you get it? Add all
sir.
this, add this, and add this. This three together, total of this, total of this, total of this. Add all the three together, then get a total for liabilities and accumulated fund should be equal to total assets. Do you understand it? So this brings us to the end. So please go and add and balance it. Now, this is what I want you to do for me. We are done. Please, we are done. This what I want you to do for me. Now that you have understood, me too. Do you know what I usually do in the examination hall? This is what I usually do in the examination hall. Listen, if I'm doing financial statement in the examination hall, me always my financial statement balances. Me, I've never prepared a financial statement that has not balanced before. Do you know what I do? When I go to the balance sheet, this is what I'll do. I'll quickly add my total assets. So when you add the total assets, please, when you add all this, you get current and non-current asset. You get 63006. That's total asset. Total current asset, you get 11267. When you add it, total will give you what? 74273. The moment I add them and I finish, then I come to here. I come to this. I come and write 74273. Maybe whether it is adding up to the 74273, whether it's not adding up, maybe once I get my total asset, automatically liabilities and the accumulated fund should be also equal to 74273. The truth is that if they are marking the exams, if they are marking the ICAG exams, this is what they do. Listen, they don't look at the total answers. They never look at the total answers, but rather their interest is in what? It's in a text. Their interest is in a text. So let's mark it together. Assuming we are ICA and we are marking, let's mark it together. This is what we do. Okay, the marking scheme. This is what we do. So we first of all start from the workings. They look at the answer. If it is correct, you get your tick. 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 If it is correct, tick. 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 If the final answer is correct, you get your tick. You get your tick. They move on to the next one. If it is correct, you get your tick. You get your tick. You get your tick. You get your, that's what they do. If it is correct, you get your tick. You get your tick. You get your tick. You get your tick. So when they finish marking, then they come to the statement of financial. Okay, you wrote a policy, accounting policy. You wrote another accounting policy. Tick. When they finish, they come to the what? Statement of financial performance. I'm teaching you on the market too. They come to statement of financial performance. You wrote the heading. You wrote heading. You get a tick. Okay, statement of financial. Answer this one. You wrote this one to get a tick. Then they'll come. Direct tax. Tick. Tick. Assuming this is wrong. Assume it is wrong. Wrong. Assume it is wrong. Wrong. Assume you know. I'm not saying it is wrong. So you get your tick, you get a tick, you get your wrong, you get your tick, you get your tick, you get your tick, you get your wrong, you get your tick. Let's say it is wrong, you get your wrong. They come here, you wrote the heading, correct. You wrote the this one title, correct. You get your tick, you get your tick, you get your tick, you get your tick. Assuming this is wrong, you get your tick. Assuming this is wrong, you get your tick. So this is how they market. You get your tick, you get your tick. This is how they market. Do you get it? After they finish, they will count the number of ticks. They will count the number of ticks times a certain number. Let's look at a typical example. Let me open a past question, any past question at all. Please, this is how they do it too. ICA Ghana past question.
Say you are too good.
I'm too good, eh? So please, this is how I just want to tell you that you don't have to go and waste your time to go and balance the thing. Some of you, when you go to the examination, the thing is not balancing, as if the whole world is coming to an end. Meanwhile, it's just 20 marks. Whilst you can just read PPP and get 10 marks, you can read budgeting and get 10 marks. If you master budgeting, 10 marks. Basis of accounting, 10 marks. So 2020, November 2023, financial statement came. So we go to public sector accounting. This is the marking scheme. Anybody at all can be examiner. Me, Sir Steven, I can be examiner. So when I go, they give me the marking scheme. It's because the marking scheme that will guide me. Okay. Now the solution went fine. See, marks are evenly spread using text. Please, marks are evenly spread using what? Text. Keep any there. Text equal to 60 marks. So any tick you get behind, there's a mark for it. Just that this one, no, they didn't give us the text. But Brofuni say marks are evenly spread using text. And that's what the text now say. And I said the total marks is what? 60 marks. So as you can see, let me go to a different past. Let me go to a different past question. Maybe this one is not making justice. Let's go to 2020 thereabout. Okay, 20. I just want to tell you that focus on getting text. But we are done with the thing. No? This one, financial statement question came. I've not opened it before. Okay, see. Hey, the same question, cry. Hey, see, the same question. No. So this is an ICA question. Okay, 2018. Let's go. Solution. The same question. The same question. Let's see how they mark it. 2018. The same question. See. Please. Hey, somebody is talking at the background. The way I'm serious now, if you talk plenty, I will move you from the page. Mute your source, please. Okay, good. So please, look at this. The same question. What did they say? They said that what? They said that what? See, I'm gonna say maximum 70 ticks. 70 ticks. So you get 70 ticks. Correct. Get 70 ticks. You have 70 ticks. When you have 70 ticks out, automatically you've gotten what? 60 marks. So when they finish marking, they will count the number of ticks you got. When you get 70 ticks, you are getting 60 marks. 60 over 60. And maximum 70 ticks. So the student is supposed to get 70 ticks. So when they finish marking your work, they have to now come and count the total number of ticks you got. So please, those of you who focus on going to balance it, you can decide not to balance it and you get 16 over 16. Somebody can balance it and the person will get 60 over 16. So when the person is marking and see that this is correct, the person will mark it correct. It's correct, the person will mark it correct. It's correct, the person will mark it correct. When the person finishes, the person have to go back and come and count. 1, 2, 3, 4, 5, 6, 7, 8. Oh, yeah, the total number you get, multiplied by 0.23. So which means that every one wrong you get, it's not up to 1 mark. You can get 3 wrongs and it is not up to 1 mark. You've not gotten 1 mark wrong. But that's here. You can get like 5 wrongs and you still get 15 over 16. I don't know if I'm communicating to you. You can get 5 ticks wrong. Like I've gotten ticks here. This tick wrong, this tick wrong. I can still get 16 over 16. If I get only 2 ticks wrong, I've not gotten 0. So please, when you go to the examination, don't focus on balancing it. Focus on getting maximum ticks correct. You posting transaction from the trial balance alone, you should get 10/20, 10/60. Posting transaction from the trial balance alone. But a lot of transactions in the trial balance, you can just post it directly into the balance sheet, directly into the statement of financial performance, and you are eligible to get maximum ticks. That is why I keep telling you, solve more questions. You see this footnote, the inventory footnote, you get it. The correction of error, you get it. Balance sheet transactions, you get it. Apart from that, the outstanding, obidika, debt forgiveness, the footnote, you get them. If a question should come under statement of financial, you will get these areas. This area, they always bring them. I'm pleading with you, solve more questions, and this is how you pass. So please, we'll communicate the next meeting day. The next meeting day will be communicated on the page. Okay. So the assignment I'm giving to you now is for you to resolve the question you have done. Now that you know how it's been done, resolve the question. When you finish, compare it to the answer. Please, it is 2018, May 2018. You can even go and compare it to the final answer in the marking scheme on the ICA. Please, you don't have to get exactly the same way. There are so many ways of killing a cat. Don't say that ICA use this format. So by force, you also used to use this format. No, use the simple format we used. Okay, use the simple format we used, and it will balance. We solve the same question in class, and it's balanced. So take your time, sit down, solve the same thing, and balance it using this simple format. This is the easiest format you can use. You don't have to balance it. If it doesn't balance, mark yourself against the marking scheme. Mark yourself and see if you are getting a lot of ticks correct. Once you are getting a lot of ticks correct, it means you are doing well. You should get at least 70 ticks correct. Thank you very much.
The year again. My network.
The what?
The year.
The year is May 2018. May 2021 rather. May 2021. Okay. May 2021. Please, when you look at the ICA format, the format is different. Our format is different. ICA format is different. Okay. The important thing is that you should be able to post rightful entries. Okay. In fact, our method is correct. Use our method. Okay. And it is easier that way. Okay, good. So, Mr. Cephas, do you have a question? Either than that, this brings us to the end. We have to prepare to work. So please, we'll meet the next time and I'll make it available. The recorded video will be on the Telegram page, which I'll share the link with you for you to go and have access after the class. Okay. Thank you very much.
Sir. God bless you for your effort. We really appreciate it.
Very well.
God bless you.
Good. So please, we'll meet later.
God bless you. God bless
Thank
you.
you, Justin.
More data for you.
Okay. Thank you very much. God bless you. Bye-bye.